following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by Ninjatrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Good morning, everybody. Welcome to Ninjatrader Live. My name is Jim Cagnina. It is November 7th, 2024, FOMC day. Joining me live from Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Good morning, Jim. How you doing?
Pretty good. I can't complain. We have some rain going on here.
Oh,
It's been a drought, so this is good for the fauna. No, the flora. Sorry, it's good for the flora.
nice.
Yeah. How about you?
Yeah, a little overcast, no rain yet. Warm, unseasonably warm, which is nice. Makes it easier to go out and get a walk in or run some errands later. But yeah, it's good. Can't complain. Ready to work.
All right. Well, I mean, we're back-to-back big events, right? So today we do have some big events. So let's get right into it and talk about them.
For sure. So, as we usually do on Thursday mornings, jobless claims. I think that was the biggest news. I think we'll come back to it. We'll just go through the events, come back to jobless claims. We also got productivity and costs. We'll have wholesale trades at 10 o'clock. That might give a little bit of a bump there. EIA natural gas report, 10:30. So if you're trading natural gas, just be careful around that time, 10:30. Federal funds rate FOMC statement, 2 p.m. We'll get the news. What is that news? Are they cutting rates? It's probably baked in the cake that we've got 25 basis points, a rate cut coming up. But I think more importantly is what is Jerome Powell going to say at 2:30? That's where you want to really be careful. We've seen that roller coaster up and down during the press event, so be careful around there. And then consumers credit at 3. I think that'll get lost in the wash.
Yeah, I think you're right about the wash. It'll be in the rinse cycle. But let's kind of look at those jobless claim numbers. It's some interesting data, right? So right for the initial claims was right on point, right? Forecast by the so-called experts was 222,000. Actual was 221,000, a bump up from the previous 216.
Right, and that 216 was revised up, Jim, to 218. So a little bit of a revision to the wrong side. I think the story here, though, is the continued jobless claims are at a 3-year high. They were the forecast was 1.873 million, which is 1,873,000. We got 1,892,000, so almost 20,000 more continued jobless claims than forecast. And like I said, that was last seen November 13th, 2021, when these continued jobless claims were coming down because parts of the country were becoming unlocked from the COVID lockdown. So, that I think is the story, but we won't hear about that because jobless claims, the actual number this week came in under forecast. So, I think that's going to be the headline number speaking over the continued jobless claims number.
Yeah, interesting on that as well. And then I think this data is too new for anyone to say, well, this 20,000 differential you guys are talking about is suspiciously close to the 20,000 folks that Boeing laid off. And I think this continuing jobless claims, though, is kind of backlogged a little bit.
Yeah,
That
I
makes
don't know like where it sits in that cycle, but we can only judge against itself, really.
yeah, for sure. In any event, the insured unemployment rate is 1.2%. That didn't really change from last week.
And then labor costs. Labor costs increased. They almost well, they increased from the previous report about a month. Was it a month ago? Labor costs, I don't think is a monthly report. I think it's a quarterly report, right? If I'm not mistaken.
No, 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 no. This is in the productivity and cost release that the Bureau of Labor Statistics issued this morning. I believe it is a monthly kind of number, but you're right though that unit labor cost actual was 1.9, forecast was 1, and one might kind of have one eye squinting over to the inflation side of the dual mandate when you get numbers like that.
Yeah, I mean, if you're a laborer, if you're a worker, if you get paid for your job, then that's could be good news, right? Because that cost, the labor cost, is the cost of business,
Hmm.
and that could include your salary, right? So that might bear itself out in wage increases. So that's great. But you're right. The flip side is, well, we have more money in our pockets. We're going to spend it, which could be inflationary.
Yeah, I think we're labor, me and you.
Yes.
We're definitely part of the labor force.
Right. Oh yeah, yeah, for sure.
It seems like fun and games, folks, but it's not. It's labor.
It is.
Any event. All right, all right. Well, let's take a look at some charts here. I mean, with after the dust settled a little bit, the stock index futures are all kind of pausing a little bit, taking a deep breath, with exception of the micro Nasdaq. We'll get to that in a second. But here's the E-mini S&P. We had a ginormous candle. That's a CMT term. It's in the definitions. High to low, we're talking 150 points, more or less. Today, a relative baby candle, but E-mini S&P is up 16. So no big retracement on the horizon just yet, even after all that economic data was released. I have my minus 12.5% harmonic just short of that 6,000 level, Tom.
Yeah, I mean it's really in reach, right? If the average true range is about 70, 65 to 70
Yeah.
lately, the low is 59.50. So, we could see 6,000 today. And we may even see it due to the volatility around the press conference after the announcement. So I think it's in reach. This isn't surprising, right? We talk about news events like the Fed, or I mean, probably the biggest in 4 years, like we had on Tuesday. There's the initial reaction, then there's a little bit of, I would say, digestion, and then there's, okay, what did this really mean the next day?
Yeah.
Right. So I think, tomorrow will be kind of, what does the market really think? And this is kind of something that Anthony Crudele talks about, which is the three parts of a reaction to a big news event. So we're seeing day two, and, even if we don't have another huge candle, the trend is continuing, although, it's going to be, I think it's just natural that it's going to be dwarfed by
Yeah.
yesterday's move.
Yeah. And I also have, yeah, I mean, today's, ordinarily would be the biggest day of the month, maybe the biggest day of the quarter, and no one's even talking about it. So, well, we're going to talk about it, right? We're doing a live trading thing then, right? This afternoon, special live trading event open to everybody. You can come to the stream. I think it's a different link for the stream though. And then we're going to be placing some live trades and talking to Dan Gramza.
Yeah, that'll start at 1:45 Eastern. So we're going to do a little bit of what to look out for into the actual announcement, and then we'll digest, what happened, and we'll look at the market, look for trade ideas, but then we'll carry you into the beginning of the press conference, which again is kind of a reiteration of that statement that they issue at 2 o'clock. But that'll
Yeah.
be fun with Dan. I think I haven't seen Dan in a while, so I'm excited.
Yeah. for sure. It's going to be great. I talked to him last night on the phone. He's pumped up, ready to go.
Oh, good.
Yeah. The other thing, Tom, we had this old extension, right? Or projection. What is it called? It's called an extension, right? Old fib extension that I put based on the, where did I start it at? Let's just turn this on. So I started it when we kind of really took off here at the end of September, beginning of September,
Yep.
up to that peak. And then that third point, where's my third point at? My third point is these lows right here, this consolidation lows right here. I use that for my third point. And look at that 62.5 harmonic, 6,000. It's crazy.
You know, that's really, I mean, that is uncanny. But, you know, we could
And I
get there
didn't,
today.
yeah.
You didn't,
And
yeah,
I didn't curve fit this thing. This has been
no,
on my chart for a while. Yeah.
no, of course. And you know, the points make sense, right? You're doing it from one trend and applying it to the next one. Okay.
Yeah. All right, all right. NASI is probably the strongest one right now. By the way, I did get long in the Nasdaq this morning, and I'll tell you what I did a little bit later. But just ignore that for a second. But again, this is similar, kind of not a baby candle, but you know, this is a little bit of a bigger candle here. No seller's wick at all. Bumping, trading above my area of resistance, which is now support. I'd probably taper this down a little bit. And again, I'm using these harmonics as targets. Minus 12.5 is next at 21,085.
Did we take out the all-time high? We
Oh,
did, didn't
geez.
we?
I don't know.
I've back adjusted my data, so
Yeah.
I'm gonna try it again with none.
When was
but
that? Was the all-time high here? Was it in July?
July, or yeah, it might have been even before that. No, it was July. You're right.
If it was July, then we have taken it out just now.
Okay, so today we're over 21,000 for the first time in the futures market. Yeah, we
Yeah.
didn't get to 21,000 yesterday. So NASDAQ 21,000 today, and we're trading right there, right? We're right at the
Yeah.
top. This is very bullish.
Right. Very bullish. I agree with that. You know, with this, we got that. We had a little bit of a buyer's wick on the bottom of the contemporary candle here. We'll see what the opening range brings. The Dow is unched though, Tom. Dow is like unchanged pretty much, right? You know, the interesting thing about this being unchanged, and I'm going to scratch my head and think about this a little bit, but we closed at the high yesterday. And you would expect continuation buying to come in, but that didn't happen.
Yeah, now I see a little bit different. Okay. I just see something a little bit different, but really it's the same kind of thing, which is we backed off a little bit off of that high today. This could be rotation. And you know, it's interesting because of yesterday's move being so big, you don't get that it doesn't jump out at you that okay, NASDAQ is doing better than the Dow today. Too much, right? Because they're such small candles today. They look the
Yeah.
same, you know.
Yeah.
Here's a
Yeah.
here's a baby candle stuck to the end of yesterday's, you know, at the high.
Yeah.
But you do have a red candle. Dow is basically unchanged, right? NASDAQ's up 0.5%.
Yeah.
I think this could be a little bit of rotation going on.
All right. Well, the other thing that happened just now was Mike Burke just elbowed me in the ribs, and
Uh-oh.
he said, he said, Jim, look at your 44,000 level here, even number, big even number here, and then we know there was orders sitting around that even number, so that might have kind of thwarted things a little bit too.
Yeah, and that might take time to get through.
Yeah, might take a little love. RTY giving a little bit back. Again, those kind of similar to the Dow, although we got some wicks going on today so far, above and below the body of the candle. But we're pretty close to unchanged right now.
Yeah, it seems like when Russell gets up to 2420, sellers come in and say, yeah, this is where we're not going to pass. So, you know, the question is, will we get back up there today, or is this kind of you know, a good area, 2400 or so. But it is still bullish. I mean, overall trend is still bullish. So again, this is kind of yesterday's the reaction. Today's a little bit of the digestion, and then tomorrow will be direction, I think.
Yeah, depending on what happens with the FOMC today. I mean, I could envision a scenario where we're kind of like, now that we kind of popped up here a little bit, we broke through that area, that really keen area of resistance. I could see us kind of consolidate a little bit sideways.
Yeah, the thing that gets me though is the Russell is a little more, I would say, responsive to those interest rate cuts, but it might be
Yeah.
baked in. So who knows?
Yeah. All right, all right. We'll find out when the dust settles. Low volume so far on the stock index futures. We only remember yesterday we were off the hook on the volume.
Right.
Today it's only 186,000. I wouldn't say low volume. I would say nothing out of the ordinary.
Yeah. Yeah. I mean, we're waiting for a news event at 2:00, so could be a little bit anticipatory, maybe on the low side. Yesterday we were at what, 650 at this time in the E-mini S&P, and it wasn't even opening range.
Yeah, for sure. Gold though is trying to fight back a little bit here, Tom. We have a bid going on in gold. I have some strange lines here on my chart. Let me clean these up a little bit. I'll leave them here so we can see it. Again, I have that extension and I have my regular fibs on the right. We bounced right off that 50 EMA, Tom.
Yeah, and this is looking to be a key reversal. Not too bad. I mean, I'm looking for that piercing line for gold to say, you know what, I feel like we're back on track a little bit. But a lower low, and then we're trading above yesterday's close. So, okay, we'll see if that sees follow through tomorrow, if it stays that way. But it might not be, it's one of those things. We want to see these things happen before we could say we're bullish again. I like your trend line. I think we've talked about that trend line in gold. Getting back up above that slope is I think key for me.
Yeah, that great big hill of hope. Sorry, that was a bad song reference.
What song is that?
You know that song by Four Non Blondes, popular one.
Oh, okay. Yeah.
Still trying to get up that great big hill of hope for a destination.
Okay. That's right. When you take it out of context with no music, I lost it.
Well, yeah,
right.
And I'm not singing, Tom.
Come on.
No, not happening.
Right.
But at any event, this is a Dave Keller special. Boom, hitting that 50. I love it. He was great, by the way.
Oh yeah, Dave's great.
Yeah, so we'll see a little bit bullish activity here. Let's go to crude oil real quick. December 2024 bounced off my area resistance like a super ball. I mean, this thing just, 1, 2, 3 times, boom, bounced off right here with a whole bunch of moving averages tangled in love right now. Sellers are in charge, at least for now, right about that 38.1% fib number. I don't know. I'm a little open-minded though, Tom, today.
Yeah, I mean, you've got this range-bound activity going on that, we could be hitting the top of that range and turning right around. Yeah. I don't remember what the numbers were yesterday for the EIA, but I think it was, maybe it was EIA or API where it was like a lot more was put into production than expected. And that's why you see that huge wick on yesterday's trading, because maybe it was yesterday's announcement. What was it? Crude oil inventories. It was 2.1 million barrels were put into storage. Forecast to have some come out. Not a lot, but there was 100,000 scheduled to come out. So a little bit bearish there, and now it's following through. This looks like a bearish day to me. And, these moving averages tangled up right there where we found the low, we'll see if that holds.
Yeah, I'm with you. And we got a target wick here too. I mean, that lows it made yesterday, that's a target wick, whether you like it or not. We'll see. We'll have to break below $70 to get there, which might be a challenge, but totally reasonable.
Yeah, we could do it. I mean, the average range of crude is 2.5. We're at, we're probably looking around 72.50 at the high, or somewhere near there. So 70 is possible.
Yeah. By the way, LaToya nailed it. The song's called "What's Going On."
Yes.
by
Oh yeah. Yeah.
4 non-blondes. Thank you for that, Latoya. You know, you get older, you start forgetting stuff. But anyway,
Yeah.
let's roll, Tom. Let's go to, I heard a noise. I got to fill somewhere, but I'll figure that out later. Uh, Treasury bonds. So I have two rectangles going here. I have a long-term double bottom. Like we're talking, you know, this was July 1st. This was before the 4th of July. And now we just tagged it again with two candle wicks yesterday and today. A little bit of a fight back up, but this would not be a key reversal, right, Tom?
Correct. We didn't take out yesterday's low. This is just looking like kind of a weak rally in a
Yeah.
longer term downtrend. And you've got your objectives, right? You've got the midpoint of the previous candle, which could be about where the moving average is now, right? What is that? The 8 period.
Yeah, yeah.
So, you know, okay, it's kind of the same area. Let's get back above the 8 before we can even think about, you know, kind of this idea of, well, we hit a recent low yesterday and we're turning around. But, you know, depending on what the Fed says today, not what they do, that what they do, we know what they're going to do. But I think it's what Powell says and what he's laying out for next year. That's going to really determine if this can get a little bit of a bid.
Yeah, it'll be an interesting song and dance today. I'm going to use the
Yeah.
word song and dance. Let's go to the Bitcoin, Tom. The Bitcoin, and by the way, Mike Burke's Bitcoin trade is still happening.
Yeah, I've got that on as well. And, you know, it's one of those things when it's a swing trade. I'm not used to saying when I exit my Ninjatrader, yeah, it's okay that I have an order in. Yeah, it's okay. You know, I've got a position on
Hmm.
because I'm usually just doing this for day trading, but it's a longer term trade. And yesterday got us to that 50%, you know, point or so, depending on you use my target or Mike's target, but it's about the same. Um, this is not a key reversal either. This is kind of the flip of the stock market, um,
Yeah.
or not the stock market, the gold market, crude market. This is the flip. This is looking like the stock market, and just a little bit of digestion of the news that happened on Tuesday.
Yeah, for sure. So we'll see here. I mean, we got a long way to go before I'm like, all right, this trend is reversed.
Oh
Now,
yeah,
again,
yeah,
I think, you know, we broke out of this 73 650 level. And again, you know, just series of higher lows, series of higher highs, and I expect that to continue.
yeah.
All right. What do we miss? Anything?
I don't
Let,
think so. Do you want to do? Do you want to
I
do a
want to clean.
currency?
Let me just clean up my 10-minute real chart real fast here, because we'll talk about this trade. I'm going to cancel my stop because I got out. We achieved the target. Anyway, all right, back.
So real
What do you
quick,
think?
Jim,
Yeah,
I
yeah.
just wanted to say special shout outs go out to Lobo and Jen P for being the first ones in the chat. Chat lives at YouTube and ninjatrader.com/events. And Jen P and Lobo were the first ones in. So special shout out. Thanks for coming back.
Awesome. Appreciate you guys being here for sure. Special shout out, Jen P, Lobo, first to chime into the chat. Love it. Thanks for everybody for being here. This is a great day, for sure. I'm pumped up about it. It's going to be, you know, we'll talk about FOMC later, Tom. But
Yep.
let's go to copper. We have like some action in copper futures, right? Yesterday, you know, Dan Grams had told us, hey, copper needs an excuse to do something. And you know, to break out of this range here. Well, I thought we had the excuse a couple sessions ago. Nope. Thought we had an excuse yesterday. Nope.
Nope.
Today we're almost having equal and opposite. I mean, after this sell off in copper, now buyers are coming in strong, and I'm not sure why.
You know, when I see something like this that's kind of doing its own thing versus what we see, you know, in the gold market and the crude market and the stock
Yeah.
market, to me, this is, well, there has to be something news that came out overnight in either Asia or Europe. That's just what I'm thinking, kind of my knee jerk, right? Because we get all these informational reports on the economy
Yeah.
globally, right? We're not just the only ones here in the US.
Yeah.
And so this could be related to China. Maybe they had some positive economic news, it suggests that, yeah, actually economy is going to improve, or
Yeah.
maybe it's in Europe, right? So this to me is kind of a bellwether. This isn't an investment, right? This isn't an investment that people sit and hold and hope to go up, as far as, unless they have a very distinct idea about how the economy is going.
Yeah. No, I hear you. I'm reading as much news as I can overnight as you were talking. We had the Bank of England cut 25 basis points. That was anticipated. It was 8-1 vote. So that wasn't a surprise. China's crude oil imports continue to slump. That shouldn't be a surprise. Everyone is, talking about their economic slowdown happening. So, to your point, Tom, you're right. There's something that happened to cause this, because not only did we turn around the trend,
Mhm.
but we broke through this area of resistance at 39.10. So there's a move afoot here for sure.
Yes, exactly. And what's interesting is I just see that consolidation area,
Yeah,
right? And it broke above, and then it broke, completely above the sandwich, and then it broke below the sandwich. And now we're going back to the top of your rectangle, kind of
yeah,
widening out that range, maybe.
yeah,
Literally, if you took it from high to low, literally we're widening it out. But
yeah,
it's not even like it was like just a mistake, right? Oh, let's get back into the sandwich. Now we're going the other way. So,
yeah.
maybe again,
Uh,
it's with all the news going on, a little bit of volatility.
Yeah, it's kind of like that slot machine Haywire. You ever play that in Las Vegas? It's called Haywire, and
No, I missed that one.
yeah, it's a good one. It's a
Good.
slot machine. Anyway, let's Tom, let's take a really quick break, and we'll get right back to it. All right, we're back, folks. Ninjatrader Live. My name is Jim Kigley. I'm joined by my partner, Tom Schneider. Tom, before we go to the 10-minute charts, I just wanted to show the Euro FX chart. I'm sorry. Oh, that's the British pound chart. I'm sorry. The British pound sterling versus U.S. dollar. UK Bank of England this morning cut 25 basis points as expected to 4.75. And we have a little bit of a pullback here past the midpoint of previous candles. And so there's a bullish move afoot here, which might be thwarted by 2 o'clock.
Yeah, I was just going to say, this is the dance that these central banks put us in, right? Which is one cuts let's just say one makes a decision, and then the next day or later that day, the other one makes a decision. And so it's a little bit of
Hmm.
back and forth. And I think maybe we'll see this come off a little bit, but I do like the fact that it's up against the piercing line if you're bullish on Bank of England. But what is that? Is that a 200-day moving average right there? Or is that a VWAP?
This is a 50. I put
That's a
50s on
50.
it. Yeah.
Yeah. So, it's having trouble getting above the 50. It was looking okay a couple days ago, testing that 50, but it couldn't stay at that
That's right.
area. So, I would imagine a little bit of pulling off from where it is now
Yeah.
at 2 o'clock.
Yeah. So that's the story of that currency pair from this morning's excitement. 10-minute charts time. But by the way, dollar's kind of weak across the board in general, FYI. So it is giving a little bit back from yesterday. 10-minute chart here, Tom. Lower 204,000 so far traded going into the opening range. So not huge, not terrible. But this seems to be, we have a lot of big wicks in these 10-minute candles.
Yeah. On both sides, right?
Yeah.
We're staying above VWAP, point of control. This might be one of those days where, point of control will change. Of course, right now we're getting all the volume in at the opening range. So we might see that point of control shift up. We're still within that channel 1 to 2 standard deviation bands. We might pop out of
Yeah.
that on the top side if this market continues. So what's really interesting is cumulative delta is so positive. And what I mean by that is 10,000 contracts. Is that what
Yeah.
it is? Yeah.
Yeah.
So when opening range happened yesterday and we were above, 600,000 contracts traded, that cumulative delta was about the same level. It was an imbalance of 10,000 buys over the sells. Now we only have we have a third of that volume, and it's the same number. So I think this might be a good bullish indication as we open the regular trading hours.
Yeah. Yeah, I agree. John Boynton had a great comment. Good example of using level 2 data on a Superdome. Looking at ES, you could see there are 600 orders sitting at 78.50. Now, this is an old comment, John, so they're not there anymore. The high on the sell side. So, this is 10 ticks deep. You could probably go 20 ticks deep if you want on this E-mini S&P, but it shows you the volume on the bid side, the volume on the offer side. These are limit orders waiting to be filled here. And every once in a while, you get what's called imbalance, right? You'll see some bigger orders on one side versus the other side, and it could give you an idea of areas of interest and maybe where some of the big traders are thinking about getting long or short.
Yep. Agreed.
I think 6,000's, we got to start. I mean, we would be doing ourselves a disservice if we didn't kind of go like, all right, 6,000 could be a self-fulfilling prophecy today.
We could get it in the next 2 minutes, Jim.
No, that'd be like what?
No, but
Yeah,
seriously, we're 20 handles away. So average true range is 67. Low of the day is what, around 50, 55?
Yeah, we're at 30 right now.
We're at half the average true range, less than half. So
Yeah, and if you add 30 more, you're above that 6,000.
right.
We'll see how it goes. But again, buyers are kicking in now in the opening range. This is only the first 10-minute candle. Anything could happen in the second 10-minute candle or even at the end of the first 10-minute candle. Literally only like 3 minutes into it, right? So I'm not going to get overly enthusiastic, Tom.
Yeah, I'm not looking to sell here for sure.
Well, yeah. Well, let's then go to the opposite end of the spectrum. Let's go to the RTY. Let me clean this chart up. Apologize for not doing this ahead of time this morning. It was raining out this morning. I had to do some stuff outside and got a little backlog. The dog wanted to just go for a walk and all that stuff. So I didn't clean up all my charts. But here, this is kind of, VWAP. We had this VWAP. Look at this. This number here, this is like before the economic release happened, Tom. This was at 8:20 to 8:30. bar.
Wow. Wow.
I don't know. That was just a big sell-off right here. This is getting ugly, Tom. I'm suddenly become bearish here in the Russell 2000.
Makes me wonder if the if those numbers came out just a tad early. When I see something like that, doesn't it make you wonder that?
Well, you could check. Let's go to the E-mini S&P and see if. Oh, geez, I did it again, Jim. Come on,
Uh-oh.
man. Wake up early. I got to hit that alarm earlier. I don't even use the alarm anymore. I just wake up. Um, no, maybe. I
Uh,
don't know. Not seeing the
okay.
same phenomenon there.
Yeah. Yeah, okay.
But yeah, the Russell, though, we'll see. We'll see if we achieve the target wick. I have it circled. Point of control is pretty close to the point of control yesterday, right above that 24 even number. So far. Now it's lower volume marketplace. There's only 50,000 traded so far, but relatively speaking, this is where the point of control is. So we'll see if that acts like a magnet if we get up there right next to the Globex close too. So that's pretty close touch point there.
Yeah, and you saw how earlier in the day, 2:30 or so, that yesterday's close held as support, and now it looks like it's resistance. If we were to come back up in that area anytime soon, now not the whole day, but anytime soon, that to me would be a short, a good short, a good place to short because it has acted as resistance. We might have missed that boat though, and I like your target wick.
Yeah, so that's a great point, Tom. I just kind of thread the needle here. So support, drag it through the breakout, and now it's resistance. I love that. I think that's right. This is an inflection point. This is an important area right here. And look at this. This is a doji, long-legged doji right now. So
Yeah.
a little bit of an uncertainty in the Russell. So
Take a look
Flight
at
here says, so
yeah.
this is a great comment. Flight here says the bond market is indicating possible inflation. Russell does the worst in an inflationary environment. That's a good point. That's a really good point. If you just look at today we're fighting back a little bit though on the 30-year, and the auction yesterday was actually pretty decent. I'll tell you the results. I was shocked, and I think there was some bargain hunters that came in yesterday at that auction. The results were, drumroll please, bid to cover ratio 2.64. So it's above 2.5. It's not 3, but it's decent. 25 billion was tendered. Only 13. Here's the key metric, Tom. Only 13.02% of the bids were at the high yield, right? So it was a little bit competitive. There was some bidders in there. So I was kind of surprised at that. And so we're seeing some follow through today. Right now, we're right up to the pivot in the 30-year bonds.
Yeah, we start to see a double distribution happening here. A lot of times you'll see in the bonds a nice profile, right? A nice volume profile. Here, getting a little bit of a bid in, earlier this morning, you could see those 3 big green candles that took us to this level. And that was kind of right after the bonds open. Actually, bonds open regular trading hours at 7:20 Chicago, 8:20 New York,
Yeah.
and immediately saw a little bit of a downdraft, but then recouped. And you can see this kind of wave-like pattern happening. I would imagine we're going to take out I think we just made a new high of the day, but we could take out that pivot and then maybe get to 117.
Oh, I didn't want to do a Ray. Darn it. So anyway, to Flathere's point though, this is where that productivity and cost number came in, along with the jobless claims data, and that's what triggered this kind of big move up. I think. I mean, we were trending down. That triggered that big move up, those economic releases. So maybe the idea is, in thinking about inflation, maybe that productivity and cost number wasn't as caustic as everyone thinks. Bond market liked it, and we rallied up again today. So we got a long way to go before we're any significant retracement on daily chart here. But I appreciate that comment. That was a good one.
Yeah, that candle right there, the one about a half hour ago, that's a true Maribozu candle.
Oh, I
The
like
the
it.
the high and the close are the same price, and the open and the low are the same price, right? It opens at the low,
Yep.
closes at the high. Now, again, intraday data being what it is, I don't think it's as significant as a daily data, because daily data, you do have a break. You do have an hour break. There is a sense of finality to the session. But in 10-minute data, it's just one 10-minute slice in a whole mess of them, right, for the
Yeah.
rest of the session. So, but
Yeah, but
that's a true Maribozu right there.
I like that, and I like we haven't closed below the midpoint of that Maribozo. What is it?
Maru Bozu.
Maru Bozu.
Bozu. Yes.
Bozu.
Yeah.
All right, I want to say Bozo, but
I
that's
know, I know.
it's just. But anyway, so yeah, we had a little bit of a stall here, but boom, we're back up. So again, I'm bullish right here. This is moving up today.
Let's go to
Where to next?
NASDAQ. NASDAQ. Let's
Nazi,
go to
micro
NASDAQ.
Nazi. Holy cats. Yeah, so by the way, I moved my stop up a little bit and got stopped out on my long trade. Here's my entry, 959 actually. I waited for a retracement back down to this little area of support. And then we took off. I got out right here at 21,016.
So I think we're getting ready for about the time that Mike would say, "Okay, I've seen enough. The opening
I know,
range,
I know.
9:45. I can kind of tell what's happening." And then this might be one. Okay, are we going to get to R1? Are we going to make an all-time high here too? We've already made one. Can we just push it up a little further?
Yeah.
Yeah, we might see that.
Let's do some measurements, Tom. I mean, we're going to have to keep moving this. So we're up about 218 points from just an average from the daily range. R1's in play for sure. I like that. So benchmark candle, biggest candle on the playing field right now is the last candle. Going back to that the economic release, nothing much happened, right? It was like, yeah, okay, we're gonna stay green, and then boom, just off to the races on this opening range bar here. So buyers are coming in still, man.
Yeah.
Buyers are still coming in big time. Tom, so we have some great folks with us today.
We do. I think that's my cue to read the lists, right?
There you go, baby.
Yeah, I love it. Love it when I don't miss a cue. Oh, so in addition to Gen P, we have Paulie H. Good morning. Raleigh is here. Mark Mosqueda, Scottsdale, Scott, Mark R. Robert W. in Wake Forest, North Carolina, Simo, L.A., Future Fun, R.C., Moose, Carlos NYY, Cal is here, Nola Boy, Eagle, Franco, Kaz, Yovan, Michael Crump is back, Jeanette is here, J-Man 2005, HP. We also have Lobo, as I mentioned before, Engineer Bear. Engineer Bear says, hi, everybody. At a recent press conferences after the meetings, Powell has been wearing a purple tie. Do you think he'll switch to a red tie? I don't think he will, but that would be a great prop bet. What color tie will Jerome Powell be wearing? Billionaire Carter is here. Six String Dow, The Leeb, Jorge Castaneda, Classic Investments. Good morning from Atlanta. Good morning to you, sir. And this was from Atlanta. So have you ever been to
Yeah, no,
Atlanta?
no. Oh yeah,
Oh,
Atlanta's
okay.
a great place. I
Yeah,
love
it is.
Atlanta, and so no, Classic Investments. Good to see you here. Appreciate you being with us. Yeah, we've known each other for a long period of time, and
Oh, good.
we're both wrestling fans, so we've exchanged some intel over the years. So thanks for being with us.
That's great. W. Mesticom is here. Malek Shalomo Trading. Steve Haggerty from Greensboro, North Carolina. Mr. FMG010, this might be your first time here, unless you were here last week, but welcome and welcome back if that's the case. John Boynton, as you mentioned, Eric 856, and Ilda Amador is back. Latoya, as you mentioned, and Josh Todd Musser is here. Let's see, D. Merlo is back. Good morning, D. And we have Michael Mayo. We have iCal
Mayo,
Mayo.
Maelo. Go
I
ahead.
think he corrected us, but you're right. Rampage is
Maybe.
here. He has a trade idea. We'll take a look at that in just a moment. Genesis Tech is here. Xavier Aloha, good morning. Randy Booth, Fly It Here, you mentioned. Kevin Stark, Thomas Bolatow, Lou Man, Aaron is here. Daryl Booth is back. Gustavo Quiros. Oh, you can always correct us, Michael. You know what's funny? We have a great group. Thanks everybody
Yeah.
for being here. We really appreciate it. But what's funny is when people put in the initials GM in capitals, you know what I
Yeah.
think, Jim?
General
I
Motors.
No, I think general manager because when I was
Huh.
working in baseball, you'd
Oh,
see
no.
somebody's name and then GM,
Yeah.
right? So I see that and I say, oh, that doesn't. Oh, okay, it's good morning.
Yeah, that's good morning for sure, for sure. By the way, just one more wrestling thing for classic investments. NCAAs, Sam, NCAAs are in Philadelphia this year,
Oh,
and I'm going. So if you're going to be around, let me know. It'll be fun. I might even have a Sky Booth ticket, actually. As weird as that sounds. But anyway, off to another topic.
when are those?
March 23rd, 24th, or
Okay,
22nd, 23rd, or something like
nice.
that. Yeah. Yeah. In any event, all right, where do you want to go, Tom? I mean, things are just, buzzing here. We're starting to get a little bit of volume, not a lot of bit of volume. The micro Nasdaq is the volume winner right now, 458,000 contracts traded so far, so it's pretty busy. Um, the even the S&P 280,000 with the micros only at 180,000. So I'm going to say that ratio is suggesting maybe there is a little bit of institutional participation this morning,
Yep.
but not a ton.
I was
Oh,
going to take.
Simu said he'll see me there. Sweet. Love it.
Oh, nice.
Good. Good.
Let's take a look at gold.
Gold, please. Sorry, Kevin.
So a little bit of a pause here on this really nice move up to 670, 30-point move since about 720 this morning. It was 2670, and this current candle pushed it a little bit above 2700. Now it's coming off. If this candle closes below 2698 spot 3, that would technically be considered a key reversal, although intraday again, not as much weight given to those key reversals. We do have negative cumulative delta, or increasingly negative cumulative delta since about 8 o'clock, which was a couple bars into this uptrend. So that's to me is profit taking. I don't think that people are thinking, wow, you know what? This is as high as it can go. It might be as high as they need it to go for their trade to be, acceptable, right?
Yeah.
Or if you're short and it starts to run out away from you,
Yeah.
yeah, you would turn around and sell it. But I think it's more profit taking, and you see a pause in price, you see a pause in the cumulative delta, you know,
Yeah.
it's just weird.
Th- It could be Today could be a revenge day for gold.
Yeah. Yeah.
So I mean, this is a very orderly kind of comeback, right? Here's our economic releases right here. Not, just continue this just continued kind of not no huge benchmark candles, no huge price dislocation, no shock, just kind of steady Freddy. Yeah, there's a big candle here, but it's not that big, and just keep moving up. Series of higher highs, series of higher lows. Pivot will be an interesting place. We'll see if pivot acts as support, and we continue our way up.
Yeah, I agree. I agree. This will be interesting to see if we test it. We're at doji right now. We were trending down a little bit, but we've got higher highs, higher lows. Maybe this is an idea for a trend trade at 10 o'clock.
Yeah, so we'll see. In any event, let's go to the Bitcoin time, hovering around. Um, I think our exit is 78,000.
Mhm.
Our stop is at 72,000 now. And actually, I could show them. I could show the Mike Burke trade. Let's do this. I'm going to go ahead to my chart trader. I'm going to open it up. I had it in a different account. That's all.
Oh, I see.
So, oh, and by the way, I didn't put the stops and targets back in, I don't think. Let's see if I did. No, I think our target was 78,000. This is a swing trade, everybody. So I'm going to get it right there. And I think our stop time, last I checked, and Mike's probably going to want to adjust this, but I think the last time we were at 7,200 as a stop, but I think he's probably going to want to adjust it somewhere else. So I'll just put it there for now until he tells me what he wants.
I could tell. Yeah, I think
Can't
we
remember.
had it at 71,000, but I think you're right. I think he would probably move it up a little bit as,
Yeah.
we had such a big move in Bitcoin. We had a 10% move roughly. Maybe it was
Yeah.
9%, but now it's backed off about 2.25%. That's, it's the opposite of revenge trading, right? It's just a little bit of over exuberance, maybe coming back down to earth a little bit. But if you're long, which we are in our simulated account, we want to see this pause and then return to the upside. I've got what 82,000 is my target, and that's at R2 today.
Let's just check that out on the chart.
There we go.
Yeah, that's way up there, man. I hear you. I hear you. I mean, this is just a baby pullback. I don't see any like fire
Yeah.
alarms going off. So,
No.
all right. That's the Bitcoin story. So, what else do we have going on? Nazi's still pretty strong. DAX Eurostock 50 pretty strong. Nikkei's off a little bit. We have Nikkei now. I heard. And I got to look into this a little bit more. I heard there's some micro Nikkei futures and Nikkei index futures that have just been released. I got to do some more research on that. Maybe we'll get Craig Buick to talk about it when next time he's here. But these are the regular Nikkei futures. I just threw them in.
Oh, okay.
Under my stock index futures section of we used to call this the scoreboard at my old outfit.
Oh,
It's the market analyzer here.
I like that.
Yeah, you might think quote board. So,
By the way, let's take a look at copper.
yes, sir.
Rampage
I'm going to
says,
go back
go
to
ahead.
our regular account here. Go ahead. Rampage says what?
Rampage says I'm going to see copper test 3.9000.
What? That's like way down here.
I
That's
think we
like
have to go back to a day. It might have been when we were looking at the daily. Oh, that's our August lows basically. I mean, pretty close.
Yeah, I don't know. This whole copper move is kind of a mystery to me. That this breakout down and then breakout up immediately. It was a strong reversal, and we're still kind of moving up here, man. I mean, we've just been railing. And we might not know the reason, but we might not care. I mean, the trend is I would not hit the sell button just yet, right? We have previous sessions highs here. That's also in play for sure. Where's R2 at? I think Mark is asking about R2. R2 is way up here, though. That's pretty far.
Yeah, this is a candidate for a breakout trade at the 10 o'clock hour as well.
Yeah, that's right. This is a breakout candidate.
Rampage says by the end of the year for that 3.9 target.
I see. Okay.
Yeah, long term.
Speaking by the end of the year, we have a couple contests we should probably be talking about right now.
Right. So, and we've got little over 1 week left to get your guesses in. Guess the close. Gets the close price of the micro NASDAQ March future, because that will be the front contract then. What will be the price of NASDAQ at the end of the year? The MNQ March future, and also gold. What will be the price of gold? That'll be the February contract that we'll market against. So if you can send us an email at learn@ninjatrader.com, get your guesses in. The last day to get your guess in is next Friday, the 15th. So we'll be talking about it this week and next. But the winners, or potentially one winner, if they guess both correctly, gets a $100 Amazon gift card. And I think Mike's trying to get some hats involved.
Oh yeah, the hats, the gear, you mean?
Yeah,
Yeah, I got
the
so
Ninjatrader gear.
I have a Ninjatrader hat, and like all of my Ninjatrader gear, my family just
Scoop
steals it.
scoops it up. Yeah.
Yeah, kids come and go. Ninjatrader gear disappears. My wife has adopted the hat. She loves it, and she is not a hat person. She's never wore a baseball cap before. Now she can't take it off. Like, oh my gosh, could I have something, please? I got to call headquarters and get. I need a coffee mug or something.
So Jim, helpful tip,
Yeah,
hopefully.
yeah,
When you get that package from
yeah.
Ninjatrader, don't open it in front of her. Instead, make it a present. Birthday present, anniversary present, Christmas present, whatever it is.
Oh my goodness.
You,
I'm thinking about the calculus behind that idea, and if it's,
it
I don't
wouldn't
know.
it wouldn't fly in my house, but maybe in your house. I don't know. I've not
Yeah,
met your wife in person yet.
yeah. She's very lovely most of the time.
Oh, I'm sure she is.
Yeah.
She
Anyway,
might not put up for that, but okay.
no, we have a newbie, first time in the YouTube chat. Mr. FMG010 is with us today. Thanks for being here.
Good. Good.
I'm just going to say Mr. F. I'm not sure what FMG stands for.
Fly out of here.
I know. I know. Oh my goodness. All right. So, getting ready for the trade setup idea portion of our broadcast here. So, possible breakout trade in copper. I'm loving this Nasdaq. This Nasdaq is strong, strong, strong. Also, so that's on my radar screen, Tom.
Yeah.
What else you thinking?
I mean,
Gold, maybe. Gold is again. What is going on with my lines? Gold is also on my target as well. A lot of stuff breaking out to the upside today, guys.
it is. It is. And to me, if you're going to do copper, you could do gold, nothing's stopping you. But to me, that's kind of like being in the same asset class if they're trading the same way. They're both breaking up to the outside, out to the upside. So I don't know. I would probably copper's up 4%, gold's
Yeah.
up almost 1%. What do you
Yep.
choose? What do you choose?
Well,
That's where I think you have to look at the charts. You have to say, what's cumulative delta doing? You have to look and see, where is it on the range? All these good things.
yeah. Well, and I'll channel my inner Anthony Credelli, and I know he was talking about stock index futures before, but the idea is, hey, if you want to go long with the strongest market. You want to
Right.
go short in the weakest market. So that's top of mind for me also.
So copper would be your vehicle.
Well, with that logic, yeah.
Yeah.
But again, though,
According
I'm
to that.
going to go back to the I mean, looking at the daily chart, to your point, um, we have buyers look at the bottom. We bounced off that 50. We're close to that midpoint on gold. I'm looking at gold. Sorry, we're close to the midpoint of the previous candle here. I'm not so sure gold's not going to be my flavor of choice.
Yeah.
Yeah, is that
Yeah,
right? Flavor
I was
of
liking gold until I saw that copper chart. I like
All
that a
right.
little
Well, I
better.
could be talked into it, or yeah, I could be talked into that guy also. There we go. Previous session's highs in play. So, well, we're gonna do it actually in about a couple of seconds here. We're gonna pivot over to the live trading portion. You guys have trade ideas, throw them in too. We'll talk about them.
Right. And later today, by the way,
Yeah.
we have another wonderful returning guest, Steve Rhodes.
Mhm.
Steve Rhodes will be with us at the 11 o'clock hour. So don't miss that. But and in addition to our regular programming, Ninjatrader Live bars closing, we will have a special FOMC event at 1:45. So if you can check us out then, it's open to everybody. Just come on back, ninjatrader.com/events, or look at our YouTube channel.
Yeah, it's gonna be fun for sure. And I'll do a tweet, Tom, and with the link if anyone's following me on our new Twitter handles. So
That's right.
all right, well, let's take a really quick break and we'll come back and look for some trade ideas.
Awesome.
All right, we are back, folks. Welcome to Ninjatrader Live. If you're just tuning in, my name is Jim Cagnina, and I'm joined by with my partner Tom Schneider, and we're going to be looking for some trade ideas for the next hour, actually.
Yeah, special extended version of
Extended.
trade setups. It's great.
See, this is when the labor force is really kicking in right now. Anyway, so I left the micro copper in. I know you're all over it, and so I'm going to take your lead on this one, and then I might pivot over to the micro E mini S&P or the micro Nasdaq.
Yeah, I like that. So I'm just putting a 2-unit buy order right above the opening range high. Very simple breakout order. Prove to me you want to be up here, right? And sometimes we see this. We see this retracement off that opening range high, but I'm hoping that the market stays in that opening range. If it starts to trade down, break down below the opening range high, maybe get back to R1, then I'm rethinking this.
Yeah, no, I hear you. So I'm actually, I got you. So we're entering on a stop here, and I'm going to just draw some rectangles. There's some support, right? A little bit of support around R1, and there's support way down here. It used to be resistance at that 37.5 level as well. So that's going to be a stop. I wouldn't mind trying to get a second unit if we do retrace back to that 12, a third unit rather, if we retrace back down to that 12.5.
Yeah.
Level right there, and then we'll deal with the stops if we get filled. But again, right above the opening range low, if you want to be conservative, you'd probably be right above R1. And actually, now that I think about it, maybe right above R1 might be a nice place to be. So I'm going to try to get a third unit out of this deal. And then for now, I'm going to put a catastrophic stop loss. We'll tighten it up once we get moving here. And I can only do it for a one lot so far because I'm not filled at all on any of this stuff. So
Okay, I'm going to replicate that. I'm going to buy one right above R1.
yeah, 39.80.
And then catastrophic is right below, right around that low dip, right?
Yeah.
All right.
Order submitted.
There we go.
All right. All right. So let's kind of pivot over the micro Nasdaq right now. We have Flight here saying NQ breakout trade above 21,131.
That's our
21.
one, roughly, right?
No, 131. Yeah, a little bit short
yeah,
of that.
Yeah.
Yeah, it is R1 actually. So, yeah, I don't like doing. If we R1 could be serious resistance, by the way. So I'm wondering if it makes more sense to try to say, all right, I want to wait for it to break above R1, or I want to wait for it to break out above the opening range and then get to R1. You know, this is kind of thoughts in my head right now.
I like that last one.
Opening range.
Yeah, we could just put in a maybe could be two, because I think when you have smaller targets. Oh, here we go. I'm long two, just above the opening range high. With that tick up, try to get one right below R1. Just get a quick trade in, get a quick winning trade in.
Yeah. My fib line's useless right now, folks, but I'm just going to position it off to the side.
And why is it useless? Explain that.
Well, just because we're
making new highs.
Yeah, when you want to measure, fibs are good to measure ranges.
Yeah.
Peaks to valleys, valleys to peaks, and right now the peak is still, you have to keep adjusting your fib line up. You really need an area of resistance to establish itself, and a little bit of a pullback before you could really rely on the fibs, I think, in this case.
So we're in it. Where's our stop? I'm looking at the low of the previous candle, kind of that area. There was some, you might draw a rectangle, small rectangle at
Right there.
Yeah, so I think it's below that. I think it's like right around 45, 46.
Yeah, we'll go to 45. Give us a little breathing room just in case. So we'll see. Now I probably have 1 unit. I'm getting 1 unit off at R1. You think that's too tight?
No, no, because this could be that, this could be an area where we see a lot of resistance at R1. So my
Yeah.
thought is let's get a, quick win, so to speak.
Mm-hmm. Okay.
And then if it runs, we've got one on. If it doesn't run, well, we've got our stop at break even once we trail it up.
Yeah. I like it. All right. We're rolling, man. We are rolling.
minute,
Let's see if we get up to fly it here's breakout level. Jeff is long regular bonds. So I love the fact that he said regular bonds, right? 'Cause that's exactly how I would say it, right? I mean, because that was my pit, right? Let's go. Let's just check those out really quickly here. Um, I'm long regular bonds at 116. Oh,
I like it.
that's yeah, I like that. Yeah, I would like go out and like smoke a cigar right now and give this thing a half hour. This is pretty. This is pivot. We just blew through pivot pretty good,
Yeah.
for sure. 1716. That's ambitious. That's ambitious. 1716's right here. I like it though. Let's just go to a daily chart just to see if that looks like what that shows us. And that would get us right above the 8 EMA. That would be above the piercing line of the previous sell-off candle. And we're kind of driving through this old area support, which I think is a new area of resistance right now. So this rectangle might go the way of the dodo in a couple minutes, but I like it.
Yep.
Yeah, sweet.
116 also is on the daily chart. I think if you pull in more data on a daily chart, it's a support level, right?
Yeah, we got a double
Yeah,
bottom there.
right there.
Yeah.
Yeah.
Yeah, good call. Good call. All right, we'll go back. All right, where are we at now here? Da-da-da-da.
By the way, Jim, Lewis H is
yeah.
here. Lauren Shumway. I don't know if that's the first time here, Lauren, but welcome. And then Engineer Bear says we're kind of lax on the wholesale inventories. Came in close to estimates, negative 0.2% versus negative 0.1%.
So inventories month over month were down just a tick, probably, and that could be a rounding thing. I'm not going to read too much into that. But the wholesale sales month over month actual ticked up to 0.3 when the forecast was 0.1 and the previous was minus 0.1. So again, another data point suggesting that things are moving out, from the wholesalers out to the retailers. I think. All right, let's check on our trade. Still didn't quite get to our R1. Oopsie. Well, look at that. We're going to open this guy up right here. Now, this is like an exercise in frustration, right? Because you're literally, when you watch it like this,
Yeah.
does it just drive you crazy?
Well, when it doesn't go your way, of course. But, to me, this is the paint drying on the fence becomes really exciting when you have a stake in the claim, right?
Oh, yeah, for sure. The emotions.
Yeah.
This is even worse, though, if you do this. If you look at a trading ladder.
Oh, yeah.
I mean, this thing is like, this is the problem with the micro NASDAQ is the trading ladder is so volatile, right?
Yeah.
It's a
Yeah.
smaller size tick to begin with than the E-mini S&P, and it just moves around. And look at the order book. You might say, well, the order book is so small right now. There's single digits and double digits, 10 ticks deep on both sides of the ladder. Why is the volume in the MNQ so high? Right? It doesn't make sense. It's not intuitive. Well, because these orders don't survive very long in the book. I mean, they're just getting
Right.
vacuumed up. So the book is just, and look at how quickly it refreshes. So this is a new candle here, a little bit of a sell-off. I'm going to move this out of the way. All right. Yeah, you could show the summary on the ladder too. There's all sorts of everything Ninja, you just right click, right? You right click and you get all these options, right? Columns, you could add indicators to this thing. Properties, there's a whole bunch of properties here that you could add as well. Um, I have market depth set at 10. Most markets are stuck at 10. Some markets will give you 20, actually, depending on who your broker is. 10 is enough for me. And you could change your mouse click actions and all of that stuff. And what else could we do here? See if there's anything. Show market depth, which is what we're doing. Show quick buttons. We're not doing that. Show realized P&L when flat. That'll show your total total P&L for that instrument or for that market for the session. So there's all sorts of stuff you could do here. And then way at the bottom here, you could kind of control where the trading ladder sits, right? Where the trading ladder sits. Cumulative, let's see, where's it at here? Mouse, predefined, show cumulative depth. There we go. Let's click on that guy. We'll hit apply. And okay. And then at the top of the ladder, you'll see all of those numbers being added up. Here, let's just go over to a market that's not so bumpy. Let's go to bonds. So cumulative just adds all of these orders up. Right, you got 8,000 on the sell side, you got 7,300 on the buy side. So you might say, well, there's some imbalance there. Well, now it's 74, 73. Now the imbalance goes away. So as the market ticks up, the imbalance comes back. So that's kind of you could build a lot of strategies that way.
Jim, Michael Mayo.
He said you could call him Milo. He did say
Milo.
Milo.
Okay.
Yeah.
Excellent. He said he's coming over from Thinkorswim, but his volume profile looks different than yours. So one thing that we have that you might want to take a look at, Michael, is make sure you have the order flow version of the software, because that is the version of volume profile we use. It uses every trade and the details from every trade to create that volume profile. This is like level 2 data when you think about stocks, NASDAQ, level 2. It's kind of a little bit of an advanced feature. So you can reach out to your broker or your Ninjatrader app. In fact, you can send an email to Ninjatrader right from the platform and just ask about the order flow version of the package. Of the software, order flow version of the software, because it is special data, there is a little bit of an additional cost, and it might be handled differently, depending on who your broker is.
Yeah, no, that's for sure. But the other thing to check also. So I'm just going to go to my indicators, and I'm just going to show you my properties here. This also could be a reason why maybe you're seeing a little different data. When you go to order flow
at the top,
volume, volume profile, you got to choose ticks per level, right? If I change it, this is basically the height of the histogram bars that paint across the screen. So I have it set for 1. A lot of people will set it for 4 because a point is 4 ticks. And so you'll see it will look a little differently. I'm not saying that's what yours is doing, but that's a possible thing to look at.
Right. And there's also placement. You can have it show up on the left or the right. You can change the colors, all that good stuff. But
yeah. Yeah. For sure. Oh boy. All right. Let's keep rolling here. Let's go to the MES. We haven't looked at that yet. Up 30 so far, after being up like what, 150 yesterday or some crazy number like that.
Yeah, this is looking a little bit different from NASDAQ in the sense that it's each candle just looks higher high, higher low, higher close. When you don't have a green candle, it's pretty much a doji, right? So we really haven't seen any backing off since about 9 o'clock. I don't know.
Yeah.
Positive cumulative delta at the top of the market tells me, or top of the market for the day tells me, there's nothing saying that this is really this trend is going to change. My RSI is at 74. It's not really turning down. The momentum is
Yeah.
there. This would have been a good candidate as well for that breakout trade, or, let's go long.
Yeah, and I'm looking at these VWAP bands, Tom. I mean, we've been just toggling back and forth between the first standard deviation, upper standard deviation VWAP band and the second one. And, if you just kind of use your imagination here and say, okay, if that trend continues, then, this is kind of my trading range, right? Buying down here, selling up here. As this thing snakes up if it continues in this trajectory.
Yep.
Oh, boy. Move that thing out of the way. All right, what else do we have cooking here? We haven't looked at crude yet. See if there's a trade idea in crude right now. So this is interesting, Tom. We had a lot of congestion around the session VWAP, volume weighted average price.
Mm-hmm.
A couple target wicks are in play right here. The trend, a nice orderly sell-off trend, right? Pre-market. So I'm feeling a little bearish just looking at this chart right here.
Oh yeah, I agree. I mean, you can see where that that value area low seems to have held really nicely as support. 1, 2, and possibly a third time. Yeah, right around there. I mean, we've wicked through it 3 times.
Yeah.
We almost got there again. So if it does fail, right, which I think it could. I know we talked about triple bottoms before being supportive, but this triple bottom kind of happens above the low of the day. And generally, you don't always see that, right? Unless there's a big news change. And I don't think in crude today, anything really changed in terms of news. It's 7 or 8 in the morning. So, this looks like it could break down. Now, could it take out the low of the day? Sure could. There's S1 down there. Why not? But I would say a breakdown of that, what is it? That value area low might be a good short trade.
That's right there, 70, that spot 84. This just in though, Chevron completed its U.S. Gulf oil shutdowns ahead of the storm. Right, we have a storm I think brewing, heading right toward Louisiana maybe. So what's that going to do to crude oil? Right, if a lot of stuff shut down for a couple days, maybe longer, that's gonna kind of slow down supply. And you should have, a bullish move up. We're not getting that just yet.
Hurricane Raphael.
Yeah, Raphael. Has there ever been a Hurricane Tom? Hurricane Thomas?
Oh, probably.
Yeah.
There is.
They should do better. I mean, we should have like a Hurricane Ripper 24 or something like that. Or Hurricane J-Man 2024. That would be cool.
I'll tell you what. What if whoever names the hurricanes, right, like Noah or whatever, auctioned off a name. Now the way they name now, the way they name the hurricanes, is they start with A, at the beginning of the season, starts with A, and then the next one is B, and the next one is C. And I think they all even alternate genders, right? So Raphael is R, so S might be Samantha. I'm just making this up.
Yeah.
What if they auctioned off? You could be like Ninjatrader _Jim as a tropical storm.
That would be awesome.
Yeah.
Yeah, that would be awesome. Yeah. Well, I don't know though. I mean, does the brand want to be associated with the hurricane? Maybe not.
I don't know, but I gotta think it's worth like at least 17 YouTube subscribers.
Oh my goodness. That's right. It probably would be. Any event. All right, so I'm going to sit on my hands on crude here just to see what goes on. Micro Nazi's not cooperating just yet. Oopsie, sorry about that. Let's open this guy up and think about what's happening here. We're just kind of, a new point of control has been established, right? Little volume cluster has been established. R1, we just missed it by a little bit. And so now, I only have, okay, I'm long too. So now I'm questioning, Tom, I'm questioning my stop if it's not positioned in the best spot of all
You think we
time.
should trail it up?
I think we should trail it up. Oopsie. Sorry, I
probably
didn't
the
mean to do
VWAP.
that.
Probably the VWAP.
No, VWAP's way down here.
Sorry. One standard deviation off of VWAP.
I got you. Okay.
The next
But I'm
VWAP
gonna
band is what I meant. Yeah.
Yeah, I'm just going to show a little bit of market weakness here too. So, all right. So I hear you, buddy. I'm with that as well. So that's right at that 12.5 harmonic, right by that VWAP band here, lower VWAP band. I still have confidence in the trade, but our stop was pretty far away. Let's be honest.
Yeah, and in this candle, if we took out the previous candle's low, which is 95.50, if we start trading below that, then I'm a little more worried because it's almost like you can see the turnaround, right? Yeah,
Yeah.
the previous candle would have been that apex, the highest high, the highest low of the day. People
Yeah.
don't think in those terms, but you sometimes you have to. And then if
Yeah.
we take out that low, well, it might be turning around. Now again, 8.5 minutes. We've got a long way to go, but I would be a little concerned if it gets back into your rectangle there or your area. Yeah.
Yeah. So just didn't get to R1 yet. That's okay. I do like the band idea though, because again, we keep touching that band and actually, I probably want to be a couple ticks below just in case. But yeah, I mean, we're trading in that band channel, and the slope of the band could kind of slow down a little bit, and we could still be in that channel.
Right. By the way, Kaz is here. I don't think we gave a shout out to Kaz.
Kaz, good to see you, Kaz. Appreciate you being here. All right, well, here we go. Here come the sellers again. Cumulative delta is still positive though, 6,200. CCI sloping down, but still over 100. Volume is tapered off a lot. If you just look at the very last panel, I have a volume histogram bar there. But we'll see how it goes. Point of control is firmly established right now. A decent level. So this is kind of volume weakness that I've kind of highlighted. And what I did was I used the volume profile. I just looked for this indentation in volume, right? And just highlighted that because there wasn't a lot of, this is a lower interest area. Traders were not interested in doing trades in this area as much as they were up here or as much as they were down here. So it's kind of like not an area that anyone, at least up until now, is interested in. So that's why I highlighted it and say, okay, maybe that's going to be support. If not, maybe it's going to be like a piece of butter and we're just going to knife through it. I'm so totally confused if butter's good for you or not now. I don't even know.
Yeah, I don't.
Bobby Iacchino is going to say yes to that, but my doctor might say no to that. I don't know.
Yeah. I have opinions.
Are they secret opinions?
Yeah.
That's all right. I won't press you on it.
Yeah. TW Trader Joe is here. I think that might be the first time seeing your name here. Thanks for coming. Aren't the better trend trades when one waits for a pullback to VWAP and then put the stop at a logical place below VWAP? That's a really great question. If we're talking about stock index futures like the E-mini or NASDAQ as they are now, that's a great idea. However, if the market rips, if the market's in an uptrend, VWAP may never catch up with that. So sometimes the idea is a breakout might be the way to catch part of that trend. Yes, we would love to be able to get a better price, trade back down to VWAP, and then see it take off. Sometimes that momentum getting back to VWAP, well, you might go through VWAP and it might continue. So that would be an argument for, retracement trades versus breakout trades. I'm not saying retracement trades aren't great. I think they're a great way to go when it isn't as directional, right? Today is very directional. Big moves up. You're not going to hit VWAP. But in a grindy day, I think the retracement trade could be a good idea. It also depends on how much time is left. If you don't want to carry a position overnight and it's, 2 in the afternoon, you might wait a little bit for that retracement and not get that lift. If you have all day, if it's 8:30, if it's 9:30, if it's 10 o'clock or after, yeah, retracement trade might be a better way to go. Unless we're seeing, I think, what we see now, which was big, strong cumulative delta on a big move up. Getting that retracement trade to VWAP might be a little difficult, but not impossible.
Yeah, no, for sure. But let me add to that. So, and I love using the session VWAP and anchored VWAP to come up with trade ideas, entries, exits, the whole direction, momentum changes, all that stuff. I love that. And the only thing I would add is, hey, if we start trading, if the pattern is right and we get down to the VWAP, then around that 37.5, then we'll put a trade on. I mean, we're just not there yet, right? So it's just if we were like, all right, we're gonna buy it here, and then put a stop down here or something, then we wouldn't have a ton to talk about because we'd be waiting. So, but we could always put it in later. It's always an option, and I love that. I love that comment. That's a good idea.
Now, Jim, I'm doing a little bit of comparison. NASDAQ kind of faltering right here. A little bit of a stumble, maybe a consolidation. E-mini continues to make new highs and new higher highs and new higher lows. So maybe we pick the wrong market just in this time period. And wrong is subjective. Pick the weaker market, even though NASDAQ is up 1% and the E-mini is up 0.5%.
Yeah, no, I hear you. This volume profile, though, scares me. I mean, point of control, competing point of control, competing point of control. There's these volume clusters all along the way. Now, I know the opening range is kind of maybe more important than anything else, but this is a case where I would probably look for a retracement trade, Tom. The other idea, someone in the chat just said, well, just sell off the 6,000 level. Well, yeah, that's an idea. That's definitely a good idea, but I don't know if it's a good idea. It's an idea, but we're not there yet. So in the meantime, I'd put a fib in, and I'm just, again, how do you measure the fib, right? You could measure it from the opening range. You could measure it from this area of support right here that was generated right before the European Open. You could do the whole field. I'm going to do the whole field. Low to high. And remember, today's a little bit in anticipation of FOMC. So there could be a reversion to the mean at some point.
Yeah, it's amazing the way the markets are trading, anticipating 2 o'clock or really 2:30.
Yeah.
Right. Usually we see range bound with maybe a little bit, range bound from the overnight and European session. And then maybe a little bit of a breakup, a return to the middle or whatever it is. This is almost parabolic, these moves.
Yeah. I hear you. I mean, again, we're right between that first and second standard deviation band, as you pointed out. I mean, this is the trend we're in right now.
Yeah.
John Boynton went long at 59.80 3/4. That's right there by the 25% harmonic. But that harmonic didn't exist at the time. So, but great, hang in there, man. Great trade.
Yeah, that's right near the point of control too. Although the point of control could change, right? As we see it at 59.85, that's really close to the volume profile of 79.50. Right?
Yeah.
Am I looking at the same thing? No, you're
No,
okay. I'm looking at the E-mini. Right. Okay.
So am I. E-mini S&P.
Yeah, so the point of control on the E-mini is down at 79.
Yeah, so that's what I'm saying. I mean,
right.
They're competitive, right? They're both pretty close, right? So, which when I see this, sometimes this area fills in with volume too.
Yeah,
but we're not there yet. I mean, we're still we're knocking on the upside, knocking on the upside. So,
is that a pink? Is that a Pink song? Is that a Pitbull song? Is that a Four Non Blondes? So what song?
No. I need
Right.
I need some newer music. They say that once you're like 35, you don't listen to any new music anymore. You're stuck with the stuff you're used to in your 20s.
I've got one for you.
Yeah.
Southern Culture on the Skids.
Order filled.
Never heard of them.
Yeah, me too. That was me up until Saturday when my brother took me to go see them. They've been around for like 35 years.
So say the name again.
Southern Culture on the Skids.
It's not
We're-
true. I live here.
Great live band. Well, they're from there. They're
Yeah.
from Carolinas or whatever.
Yeah. Oh, all right. I'm gonna look those up. I'm gonna put them on my Spotify playlist.
Yeah, something different. It's good.
You know what I did? I did before I went to Italy this year.
Yeah.
I started playing as often as I can Buccelli opera music,
Oh, wow. Okay.
thinking that I'm going to pick up some Italian just by listening to this. That didn't happen.
Didn't work.
No. But the music's good.
Love it. Okay, let's take a quick break and we'll see
All
how
right,
these
we'll be
trade
right back.
ideas go.
All right.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
All right, we are back, Tom. We are filled on our copper breakout trade. It's not really breaking out though, just kind of sitting at the top of the chart right here.
Yeah, wouldn't you hate to buy the top of the market?
We just did.
We just did. Oh, okay, great.
But
But
again, though, this might not be exhausted, right? I put a stop here right above our one. I have two contracts on. My first target, I just want to I'm gonna move this target a little bit. I want it to be the VWAP band, that upper VWAP band. I think is a reasonable target for this first contract off the table. Move the stop to break even. See if we can get momentum on the upside.
I agree. I agree. You know, cumulative delta over 1,000 on a contract that doesn't trade more. Well, it trades right now at 13,000. So that's 8% or so of the total volume traded is the
Yeah.
imbalance. So I like that. I think that's, positive cumulative delta at the top of the market. Seems to me that's
Yeah.
pretty bullish. I agree with what you said.
Yeah. By the way, Scott K is here. Long ES 78.75 out at 83.75. Great trade. Now trying to decide whether to open a new trade or not. Um, Good to see you, Scott. Thanks for being here. By the way, Tom,
Yeah.
we were talking about Linda Ronstadt in the break
Yes.
and that song, It's So Easy.
Yes.
Did you know who wrote that song? It wasn't her.
Okay, I'm going to make a guess.
Yeah, go ahead.
Kenny Rogers.
Good guess, but no. Older than that. This was Buddy Holly and Norman Perry from the Crickets.
Oh, okay. So was it a Buddy Holly song, I'm imagining?
Yeah.
Yeah, okay.
Yeah.
So it was
Yeah.
a cover.
Yeah.
It wasn't written
Yeah.
for her. Okay.
No. I didn't know. Kaz said Quincy Jones. Good guess too. But no, I looked it up, Tom. I didn't know this
Oh,
fact.
okay.
Yeah. 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 She did a cover for Tom Petty's song The Waiting,
Yes.
which is one of the greatest covers of all time. So if you type into the YouTube machine, Linda Ronstadt, The Waiting, you'll thank me later.
Okay.
Oh boy. Anyway, all right. So this everything's kind of paused here. Let's go to the micro Nasdaq, see if anything's we got any movement there whatsoever. We're green. We're green. We're getting close to that first target. If I can get my chart going here. Well, I shouldn't say that. I take it back. We're not getting close to the first target. We're we're kind of
15 handles
stalling
away.
right here.
Yeah.
Yeah, we're stalling at the high, but we're trying to break into that area of resistance at the top here again. We're trying to break into it for the fourth time, and geez, I don't know. I mean, this is kind of this might be an important candle actually.
Yeah, so you did get a little bit of I don't know, warning signal is the right term, but this lower low on this candle is taken out the lows of the previous three candles. That's weakness. But it did make a higher high than the previous candle, and it almost got to our target. So it's, kind of emblematic, I think, of these days where we have big events later in the day. It's kind of undecided, doesn't know which way to go. We've been here a little bit, we've been at this level roughly for about a half hour. So it could be time to say, you know what? Let's tighten up our stops, tighten up our targets even, or just get out. I don't know. When you just see this flat, almost flat activity for so long, it's tough, but this candle is the first sign of weakness. If we had a higher high, higher low, or a higher high, the highest high, I might feel differently, but this seems to be weakening. And you look at the cumulative delta, it's coming off. So, there are more sellers than buyers right now. They're taking profits. The question is, can we ride that out? Okay, all the profit takers are done. Can we resume this uptrend that we think we should be in, because things have changed and we're bullish now. This isn't helping with this, next red candle, fourth red candle in a row.
Yeah, no, I hear you. And my philosophy on this one is, I agree with what you're saying. Momentum seems to be going the other way, and the probability of us getting stopped out is greater than it was a couple of candles ago.
Right.
But I put this trade idea in. We put this trade idea in, and over the years, for me, I've done more damage, like moving stops around and moving targets around, than on a net basis, than sticking to my guns.
Right.
So it's just, and sometimes for me, it's like a matter of, I'm out thinking myself.
Yeah.
Which isn't hard to do, arguably, but but I'm not thinking myself, right? So you just, from a net basis over a long period of time, it's my trade idea. I'm going to own it. Then I'll do a lessons learned if we get stopped out, or even if it's successful afterward, and then maybe even enter again if we get, and we have that VWAP to think about, that VWAP trade also maybe later on in the day. So, but I hear you, man.
Well, and the thing is, if you think about it, maybe watching it as closely as we are, right? We keep coming back to it every few minutes.
Yeah.
Maybe that's not the right attitude, right? Maybe it's, okay, trust your stops, trust your targets, and, do something else. Well, look at the news, look at some other charts, go take a walk, right? Because if you're focused on it, then that's where the emotions really kind of take over.
Yeah. Right. Exactly right. And then you start seeing, you start hallucinating.
Oh,
You start seeing things that maybe don't matter, but you think matter.
right. Oh, yeah.
So that happens all the time. And then FOMO kicks in and all sorts of stuff. So I'm gonna hang tight here. But by the way, Lauren says, "Is there a way I could order or buy a Ninjatrader hat?" Lauren, there's not, but that is going in the suggestion box. Me and Tom we're gonna stuff that suggestion box with a gear store. I think that's a great idea.
I think you can buy one at jimswife.com.
Yeah, well, you have to fight her for it. And I wouldn't recommend trying that.
She has a store, Ninjatrader gear. Yeah, it would be great. Be great.
Yeah. Anyway.
Jim, one thing that you mentioned Scott's trade, but he had another part to that, which is trying to decide whether to open another position, long or short, or just hang out till the FOMC. I think that's a great question, because we've talked about this before. How many successful trades in a row before you stop trading? How many losing trades in a row before you stop trading? Or do you hit your mark? You set out, you might have a goal. You might have a goal today to say, I'm going to make X, or on the flip side, I'm only going to lose X, right?
Mm-hmm.
And if you hit that target, do you, it's earlier in the day. It's not even, 11 o'clock. There's plenty of time to trade. We know there's going to be a news event. What do you do? What do you think?
Well, I just did some fancy chart work, Tom.
Yeah.
So I changed my fib so that my 0% is right at the top of the opening range high.
Mm-hmm.
I drew a line at 6,000.
Oh.
And it magically lines up with that minus 37.5 once I did that. And that's my expectation. And I could be completely wrong. This is my opinion. I'm wrong a lot, by the way. But my expectation is we see 6,000 today.
Okay.
But again, my hopes and dreams have been dashed before.
So what'll be interesting is, do we see 6,000 and stay above at the close, right? Doesn't matter if we're putting in orders. Let's say you put in an order to sell 6,000 right now, right? Ahead of the FOMC, you're first in book, or you're third in line, or you're fifth in line. And if that market ticks up to 6,000, your order gets filled. Who cares if it closes above? Who cares if it closes below? Where, you would still have that order. But, my question is really about the volatility of the press conference. We could tick up to 6,000 briefly and then come right back down.
Yeah, I hear you. I'm right. I mean, we have to hear what he has to say. I mean, we're taking this 25 basis point cut for granted, which we should. I think, the Fed funds tool clearly says this is what's going to happen. And as Bobby Chino pointed out, we've never had a number so high in the mid 90s, predicting what Chair Powell's and company's going to do at this late date.
Right.
And so we expect the 25 basis point cut to be real. What we don't know is comments on the labor force and on some inflation items still ticking up, and how that translates to the future of rate cuts.
Yeah.
So that's I think, when I say that the devils are in the detail, I think that's going to be that his conference is, he might just kind of do a song and dance and not say anything. Who knows?
We got filled on our NASDAQ trade.
Uh-oh.
1 unit.
All right. See? Have a little faith, my friend. All right. So for my stop, though, all right, we got some work to do. Stop's got to change to 1. And then we got to decide where we're going to move the stop up to. And typically we'd move it to break even plus a couple ticks, right?
Yeah, I think that's fine.
All right. And now we'll see if we can rock and roll up higher. I did the same thing with my fib. I anchored it to the top of the opening range, and I'm going to use these harmonics as targets, right? We got minus 12.5, minus 25. R1 is critical, man. Are we going to break through R1 or not? That's going to be a big deal.
So my target, normally I would let this run, right?
Yeah.
I would just say, we've got all day, we've got a big news event. If I trail my stop up, I can only be profitable, assuming, the market doesn't just fall down and go right through my stop, which is unlikely to happen. But because I have a guest coming on in about 15 minutes or so.
Yeah.
12 minutes.
Yeah.
Then I'm probably going to put a target in at the second standard deviation band.
Holy cats.
And just do 1 unit there.
Got
and then
it. I like it.
And trail up the stop as it goes. So right now, we there's nothing in terms of how I like to trail my stop up.
No.
A previous candle or whatnot. I'd probably move it up to R1 if we see a little bit more advancement. If we get halfway to that next standard deviation band, I'll probably trail it up to R1.
Got it. Okay. That sounds like a reasonable trade idea right there.
Okay, good.
So Jeff Reichelmeyer says, "Do you still have your floor jacket, Jim?" ? So that would be a museum piece. That would be like 45 years old. So no, I don't want to blame anybody who lives in my house, but there's somebody who lives in my house that doesn't really appreciate hoarding old stuff.
Yeah, that's good.
So my trading jacket and my wrestling singlet from high school mysteriously disappeared at some point about 25 years ago. So
Ooh, the singlet, that's a tough one.
Well, it was a little sentimental.
Yeah.
But it's gone now.
What color was the jacket?
It was pink.
Oh.
Yeah. And the clearing firm was called Aardvark.
Aardvark Trading.
It was a weird thing. And then they got acquired right away by First something, I can't remember. But in any event, look at this trade go, man. We're doing it. It's moving. Copper, though, I think we're in a little bit of a pickle on the copper trade. Let's go to that. Let's see what we're doing here in copper. Now, remember, I'm trying to... Whoa.
Yeah, you're right. You're good.
Right, but I don't know if I want to buy 2 more down here. I think the idea was...
Buy 1 more, right? Was that...
Buy 1 more, yeah.
Yeah.
Now, I'm going to think about this for a second. And I'm still going to stick to my guns here, but this stop is like nowhere near proper.
First, it has to be 3, right? Yeah.
Yeah, so it'll be a three contract stops, right? So we're long 2 right now, trying to get a quick winner off the table. Wouldn't mind buying on a retracement back to R1, another contract, right? So kind of will cost average a little bit. Redefine what this first target should be. But the stop right now, I think, is a little bit, it's a little bit ridiculous. At least I'm moving it up to my other rectangle here, right above that 37.5 retracement. I think is reasonable thing to do.
So what I did, Jim, is I looked at, where was I looking? Do you see on the order flow volume profile? Yeah, right where your crosshairs are. Uncanny. So to me, you've got that point right there. And then just as you start to edge down, right about 8:15, for spot 38.15 is where that volume really gets, low. So it's kind of like a shelf almost. That's where I'm looking.
I'm going to do a region highlight tool just to kind of get my head around that. So something like that, approximately.
Yeah, exactly.
The
top
low volume node here.
Yeah.
So your stop
of
is
that
right.
Box. Right.
All right. Your stop's at the top of the box. I'd put it at the bottom.
So the reason why I say,
yeah.
Okay, go ahead.
No.
So the reason why I do the top of the box is my thought is if it gets to the top of the box and goes through, you might as well be at the bottom of the box because there's no interest in there.
Yeah. Okay. Historically, but let's just go back to this chart really quickly here, where we wicked into the box. We didn't clear it.
Yeah.
Right. We wicked into that volume deficit. We didn't clear it. We didn't break on through to the downside. So when I look at these things, it's like, all right, it could cut through like butter and we can keep moving, or it could just do a probe, like as you would point out.
Right.
I don't want to talk you out of it. I'm with you, but I just wanted to use that as a contemporary example. So you're moving this. We're moving this guy up to above the box.
I like that better.
Okay. All right. I'm with you. There we go. The anatomy of a trade right here, right now. So we need to get a little bit more love on the upside. The breakthrough really didn't break through. We just wicked it. Just wicked through, settle back down. But we're still in the bands, Tom. That's the other thing to think about. We're still in between the first and second upper standard deviation band of the VWAP.
Yep. So Jim, Xavier asks,
yeah,
can you show him how to place orders on the chart just like you just did?
Oh yeah, easy peasy. All right. So first things first. Make sure you have Chart Trader turned on.
Right.
And there's this little icon at the top of your chart, and it looks like an egg beater. One of those old-fashioned, you make your mashed potatoes with it, right? So you click on that guy, and then you have three choices. Chart Trader off, which means you cannot trade from the chart. Chart Trader on, which means you can. And Chart Trader hidden, which means you can. I have Chart Trader hidden selected, but I'll just go ahead and click on Chart Trader on just so you can see it. And then it has a bunch of buttons on the side, and you have what account you're in, your default order quantity, which you could change, and you could even add brackets and trailing stops and all that stuff. But right now, my ATM strategy is at none. So now when I want to place a trade, if I want to place a limit order, I'm going to go below the price of the market, and then I'm going to right click. And then I'll get this pop-up menu, which gives me some options. And one of them is, buy limit order, right? So if I wanted to place that order, I'd click on it and it would send it off. If this were a live account, it would send it off to the exchange and we'd be working to buy one contract at $59.91.25. If I change my mind, I want to cancel and replace it to a different price, I just grab it with my left mouse and pull it down. And then, boom, I canceled and replaced it to $59.87. If I wanted to do a stop loss, same thing, except stops are going to be, we'll do a sell stop order. I'm going to right click and I'm going to look for that option on the drop down menu, sell stop, and I'm going to click on it. And it's going to place it the same way. So hopefully that helps. That's how you do it. It's kind of handy for me, Tom, because it helps me like line up my orders with support and resistance levels.
Mm-hmm.
Alternatively, if you want to be precise and quick and nimble, you could place your trades on the ladder, and these things are in sync, right? So if I were to go ahead and just place an order to buy a contract at 88.5, you'll see it shows up on the chart. So everything's in sync. I want to cancel it from the ladder, cancels it from the chart.
Yeah, it's linked. It's in sync.
In sync, just like the band. That was a band, wasn't it? In synced.
In sync, yes.
In sync. Sorry.
What year
In
is it?
sync. Mm-hmm. Exactly. Exactly. Ah.
Think Complete.
All right.
Welcome to the show.
Flight
Real
here is
quick.
a setup. Go ahead. I'm sorry.
Think Complete has a question. What is the best way to use the platform on Mac? Is the web version really great?
Well, a lot of people think the web version is really great. I think the web platform is really great. It's you got to get used to it. It's different, right, than the download. The download's a little bit more robust, to be honest with you. The version we're using now. But no, the web is great. I mean, it's a thing that is constantly evolving, right? So I got a peek behind the curtain the other day. There's a whole bunch of new stuff coming out on the web version, which is going to be super cool. So the other thing people do, they install Parallels on their Mac. That gets messy. You could run a PC program on it. I don't know if I'm a super fan of that.
I have no experience with it.
Yeah, I use it every once in a while. I'm going to pull something up.
Oh,
though,
the
that's
web.
super-
I used the web. I used the web earlier today. I
Oh,
think
you have
it's
no
pretty good.
experience with the Parallels.
With the Parallels, with the Mac.
Yeah. Yeah, I'm with you. All right, I'm going to log in. I want to show you something super cool. We already showed this once. We're going to show it again. We have time? Yeah, we have time. I'm going to open up Pulse, Tom. So this is a new feature on the web. It's called Pulse. And you could add it just by clicking the plus button and just adding it. It's modular, so you could add this. Right now, the status of this thing is, if you have an account, you could log in and see this. This is showing, so all the for our sim traders, right? This is showing sim trade sentiment, right? So E-mini S&P, 13% of our folks trading in simulation mode at Ninjatrader are 12% more long than short. And you can kind of go through all these asset classes, and you can kind of see it's a sentiment. Is it a sentiment gauge, Tom?
Yeah, I would say it's a sentiment gauge for sure.
Yeah, I mean, this is a big one. Micro crude oil, 70% more short than long.
Right.
So this is a brand new feature on the web-based platform, and eventually maybe this will even track live trades as well. So right now it's just tracking the sim trades. So it's super cool. And I'm not. And please don't just be like, oh, I'm going short crude because everybody else is. That's not a trade strategy, but it will help you with your bias as you're looking for trade ideas.
Anthony MS, how do you pull it up, Jim?
So when you're logged into the web trader, the web base, hit that plus sign, and then you'll see Pulse, little icon. You grab it and just drag it into your workstation. Grab it and just drag it into your workstation.
Awesome.
Anyway, I don't know. Someone opened the door for the web-based platform, so I thought I'd throw it out. Whew. All right. So again, 6,000 beckoning us. So Flight here said, yeah, you could only fly it here. Thank you for that. He said you could use it only on sim right now. I believe that's correct. So you got to log in simulated live mode, and then you'll see it.
Right.
Eventually, that's going to change though. Flight here, we're it's probably still being beta tested a little bit. I don't know.
So Jim, let's take a look at the NASDAQ trade we have while we kind of end this segment in a few minutes.
Yeah.
So, this is where, okay, do I trail up my stop? Normally I would. Normally I would just keep trailing this up, and I might even just trail it up to the low of the previous bar.
Right there. I'm going to be a little more aggressive. I'll do it to R1, right? One tick below R1, I think is good.
Yeah. But I'll probably close this out when I start my segment with Steve.
Yeah, I mean, I have high hopes here, man. I mean, this is looking pretty good. This is the breakout trade. Eventually, we broke out, right? It took us
Yeah.
about 40 minutes or 50 minutes, but we broke out.
And with all day left, I mean, I would normally not put in a target here. I would, notice how the target that we have in here was where that standard deviation band was when we put
Yeah.
that target in. Now
Yeah,
that
yeah,
if you attach the order to the band, it would keep moving up, and that's even enticing too. But things I would do differently. I would leave this. I want a runner. I want a runner into, I'd probably take it off before the FOMC, but I want a runner.
yeah. My flight here just moved a stop above R1.
Yeah.
I'm gonna be a little bit below R1, but I think maybe by the time we're done with our sentence time, we can get a little love on this trade. Just saying.
We are less than 5 handles away from 6,000 in the email.
Yeah, it's gonna. I'm telling you. In any event, so Tom, you have a magnificent guest coming up now, right? Steve Rhodes, Mastering Probabilities.
Yes, mastering probability. And
I said probabilities.
Probabilities, singular. We will be back with Steve after the break, Traders Workshop. So let's go ahead and take that break.
All right. Be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Here we go. Welcome back to Ninjatrader Live. I'm your host, Tom Schneider, CMT with Ninjatrader. And for this segment, Traders Workshop, we like to bring in our Ninjatrader ecosystem partners so that they can share with you their expertise and wisdom. Today, I'm very glad to have back on Traders Workshop and Ninjatrader Live, founder of Mastering Probability, Steve Rhodes. How you doing, Steve?
I'm doing great, Tom. Thanks for having me back.
Great. So it's been a while. You're looking good. Just, for a little bit of catch up, people might not have seen you before. Just a quick elevator pitch who you are.
Sure. So I am a technical trader. Back in, I think it was 2016, 2017, there was a entity out there called, what was it called?
Timer Died.
Timer Digest.
Timer
Thank you.
Died.
Oh, I'm right here. I could just look at my screen. That would probably tell me. So they were tracking about 100 different traders out there. They went ahead and took me on. And in the first year, I was rated #1 timer for gold, for the S&P, and for bonds out there. And the second year, which was 2019, I missed being #1 by 4 points in the S&P 500.
Oh.
It was that very last day, and late trade-off in the day, and but that's okay. And then in 2020, during COVID, that was kind of the end of the publication. I think the owner there. So I am trained by a number of different people, maybe that you've had on your show out there. A lot of it though was self-training. Once I learned tools that people were using, the question that I posed in my mind was, when the trades failed, what did they not see? What is it that possibly could be out there? And from there, I created a set of tools, and that's a set of tools that I share with you today, that are shared. I have a newsletter subscription called Mastering Probability. People can go to my website, masteringprobability.com. They can try it for 30 days for free. And it's got there's a ton of education. So just from an educational standpoint, I consider myself to be pretty efficient with NinjaTrader. It's I couldn't possibly want to trade without it. The information that I'm able to get, the customization of tools that you can put together, and then I was just watching some of the stuff that Jim was, as it's just I had logged in. So I'm really interested to see those new tools out there. I'm like, my mouth is open.
Yeah. We have a great group working on the product. Our former head of this group went on to product management and is kind of taking up that challenge of improving the product. And he, that was one of the fruits of his labors, is what Jim showed you with the Pulse.
Oh, yeah.
So yeah, we're all lucky to have somebody like Mark here who's doing that innovation. And this is such an easy application to use to do your own trading on your own screens, whatever instruments it is that you want. Set it and forget it, because you've got your order open, you've got your stops on both sides, your target exit, your stop in case the trade goes wrong, and you sit there and watch it on your screen. I mean, it's really a great tool, I think. It's good TV. So, Steve, we were talking about, I think, this is definitely the first time we've had you on during such an important week, right? We had the election on Tuesday. We have the Fed announcement and the beginning of a rate cut cycle. I don't think, I don't know how far back you have to go to see that, but it could be, more than a few years. So we wanted to focus this a little bit on kind of what you saw leading into the election. What do you anticipate leading into the FOMC? And then maybe even, a little bit after, what can you think of probabilities for the end of the year? Sure. Okay. So great to start off. Prior to the election, so prior to Tuesday, I've got one of the charts that I've got up my screen, top portion, New York Stock Exchange. Yep. Bottom portion is the advanced decline oscillator. An oscillator is just simply the difference between two things. In this case here, I'm using two exponential moving averages, the 19 and the 39 period exponential moving average. So it's measuring the difference between the advanced decline line using those two items. And if you see, and we're looking at the bottom portion of the chart, the blue line is at the plus 150 number, up to the top. There's two blue lines to the bottom. The first one is at minus 150, and the one below that is minus 250. Okay. So just generally speaking,
when price attains one of those bars, so for example, if we come back here to May 15th or so, on May 15th, we can see that that advanced client oscillator line was above the plus 150 level. That's that blue line right here, is a plus above it or just at it. Tells us that we, at that stage, we are in an overbought condition. We come up here and take a look at now the New York Stock Exchange. At the same time that that pattern was unfolding, it was generating one of my 9 count tops out there. So it was nice to have an overbought market with a topping signal to then suggest, okay, that overbought market is going to get worked off. Doesn't tell us where it's going, but the nice thing about the 9 count is it also sets up a very objective level of support. And that's this red line right here. That's a breakout line. That's where price, in essence, broke out from. And price will sometimes pull back to that level, and that becomes also a buy point. I'm a pattern recognition trader, so the pattern to recognize there is when price pulls back to a breakout level, especially if it's in a bullish market. That's the area to add to your trade, take a new trade, whatever it might be. So let's come back to now Tuesday. So the market conditions have been moving towards the oversold condition since October the 25th out there. And it's just been bouncing around. But we get to Tuesday, what happens is we have a completed, as the market closes, the New York Stock Exchange closes, it completes this 9 count pattern. It does it on the bar following bar number 9. That's the low. And at the same time, we're coming from an oversold condition. We get to oversold when we get to the minus 150 level. And everybody can put this tool on their New York Stock Exchange chart, or they can create it if they need to. You just have to have the advanced decline data, and then you can create that. And once you get into the oversold, so the markets were set up with a bottom pattern in New York Stock Exchange, which we can't trade, but it's really referencing the general market, let's say, and an oversold reading. So then if we go from there and we go take a look at the Dow, I'm just going to look at the daily time frame chart so everybody can see what was going on, what messages were being generated for us. So here are going to be the daily.
Okay, great. Yeah, no, go ahead.
Yeah. So now if we take a look at the Dow equity future contract, you'll see that on the 4th, okay, that we had a TD9, we had a 9 count bottom pattern. So we had signals that what the market was at a bottom, and it didn't really matter who won necessarily. This condition needed to be worked off. Now, not that you can't get more oversold, but when we put oversold and overbought conditions with a daily chart where we've got a top or a bottom signal out there, it just adds more clarity as to what to expect. Here on these daily charts, you'll see some blue diagonal lines. Those are referred to as an A to B equals CD pattern. It was developed by a guy named H.M. Gartley back in the early 1900s, and really then, I think, brought to the public's eyes, for the most part, by Larry Pesavento, who's one of my good friends. He does a show at another channel that I also do a show on. And so if we take a look at the A to B equals CD pattern, what it does, it gives us a price projection of where price is likely to go. And here on yesterday, the ES Mini, nice rally, obviously, across all the markets. What it did was it crossed above a bearish structured daily profile. And the profiles tell us where, as you know, and as listeners know, it tells us where support and where resistance levels are likely to be. It doesn't tell us which one might fail, but when they do fail, it gives us an important piece of information. So here in the ES Mini, the first initial price target is going to be 60.1275. It's not that I'm saying that price is going to stop there, because it can do an expansion. It can go further. I wouldn't have any other topping signal at the moment as price gets up to that level. However, on an A to B equals CD pattern, the way that you know that it's complete, or the way that I know that it's complete, is on a pattern that's to the upside. I will look for a bearish reversal candle. That at least tells us that sellers are beginning to take a position. And so we want to know what the sellers are doing out there, very much like the tool that Jim was able to share with us, where right now for people on simulated trade models, you know who's long, who's short. I would venture to say that tool could be really interesting if you're looking at actual live traders out there.
And that's the goal. That's the goal eventually, right? So that 60.1275 comes from basically applying the previous uptrend, and I'm in the E-mini, applying that previous uptrend, all things being equal, basically. If it repeats, that's the target, and it doesn't. And there's really no time expectation other than, well, does it happen does this trend line become support or resistance essentially but that target, that price target, is still intact.
Sure. I'll give people a real quick lesson here. When you're drawing in this pattern, everybody can do it. You don't look. All you need to use is your line tool in Ninjatrader. So just go to function 2 or what have you, and then what you're looking for is your lowest low when you want to start developing this pattern. And it's a very subjective pattern out there.
Right.
But here, if you start at your lowest low, which I did, which was the August 5th low of 2024, and I take that, so the market's doing 75% of the work for us. It's creating the A point because we've picked the lowest low. You then take a look at where's the next highest high out here that forms. Now, because I have historical data, it's easy to go back on this chart, and then draw that stuff in.
Sure.
So here I've got the A point, the B point, which was the highest high, and then we take a look, and you want to find some type of retracement that is at least a 38.2% retracement, or close to a 38% retracement. And in this case here, the actual retracement was 49%. It's not shown on the screen, but I've got another screen that shows me what that exact number is. And then that becomes the C point. Now, typically, the way that the market moves, the A to B equals C to D. 60% of the time, that's where a market will end. Now, what's really important, Tom, is that you want to maintain. So when you draw the A to B line, you're just going to use a copy and paste. Click on the line, Control C, Control V, and then move that over to the next lowest low. You want to maintain that angle, and the reason is because we're trying to understand: is this move here, the C to D move, stronger or weaker than the A to B move?
Right.
If price is on the left-hand side, it's a stronger move on the way up. If it's on the right-hand side, it's a weaker move. So this says, okay, this would be one of those instruments where maybe it's only going to do a 1-to-1. Maybe it's one of those 60 percenters. So we could be getting near to a top. But again, I wouldn't just sell that top. I would wait for some type of bearish reversal candle on the daily. Or what I would really do is I would start going down to intraday time frame charts to see what kind of signals are out there. So for example, are any questions about that?
No, I think that's straightforward.
Perfect. So what I would do to see if there's maybe a top or a bottom that is forming, I would go to shorter term time frame charts. And an easy thing for me to do right now, I'm just going to switch this over to gold because it's really important for today, at least from an intraday standpoint. And in the case of gold, as soon as these charts here populate, one of the things that we're going to find is on the daily time frame, you can see that gold has, well, at least what I have is a topping pattern. And this is what I refer to as a Rhodes momentum indicator top. It's very much a relative strength divergence indicator, but there's other elements to it. So it's not just that. And here, what we've got, that actually formed on the trading day of October 31st. So in gold on the daily time frame was telling us, okay, it was ready to head lower. And once it got through profile support, that told us where's the next level of support. And that's where that 9 count comes in because it provides us with an objective level of support where price is broken out from. We can see that earlier this morning, that price got pretty much down to that level. When I say that level, the low so far of the day, 26.50.30, the low has been 26.50.30 and 26.45.30 was that breakout level. You don't always have to get right down to it. When you have a daily time frame that's showing us that we may be at a bottom, then what we start to look for are intraday charts that have bottoming patterns. Because if a bottom pattern is going to take place, you're going to see it also in the intraday charts. And on the intraday charts, like for example, in the case of gold out here, gold form, I'm just going to open up this 10-minute chart just to show folks. So as price was getting down late last night, early this morning, so it was exactly at 2040 last evening. So at 10:40 last evening, price was moving lower with less relative energy, and we got the confirmation of a buy point right here with this bullish engulfing candle at 2050. So that was at least the first signal that the daily was down at support. We've got a bottom signal on the 10-minute time frame chart. I'm going to close this up, take a peek at the 15-minute time frame chart. Now I'm just doing this live out here. I wasn't looking at the 15-minute chart last night. It had one of my Rhodes momentum indicator signals. It forms a bullish piercing candle, and boom, we've been off to the races. And if we look at the 30-minute time frame chart, we'll do that right now. We're going to see the same kind of a pattern out here. We see two real bottom signals. You'll see some letters on my screens. Those are referring to a wave count. I won't go into that, but when you get to the letter G, which we got to here, that can be a sign of in this case here, a bottom or a top. if we get there. But what's more important is that Rhodes Momentum Indicator tool. And I teach this for folks, so they should sign up for the newsletter. They get to try it for 30 days for free. They're going to learn this whether they stay with me as a subscriber or not. But you want to learn this pattern out here, especially from an intraday trader standpoint. So that gave us confirmation of a bottom. So it was telling us that gold, as it was getting back to that breakout level on the daily time frame, to really start looking for bottoms. Now we've had, in essence, let's say, when I look at this chart here right now, the time frame to be paying attention to, because it has an actual topping pattern, is the 60-minute time frame chart. So 60-minute time frame chart also formed a Rhodes Momentum Indicator bottom pattern yesterday, and right now, as we come into the 12 noon time frame, so 40 minutes from now, this is going to have a confirmed 9-count top. What that tells us is we should expect or anticipate some type of retracement. The retracement may only take us back to, or should only take us back to support. So the retracement might not be that much, because at 26.93, that's the level of support on a 60-minute time frame. If price were to close below that level of support, then we can see a move back towards the 26.74 level out there. What's really important here about gold is that when we do see some kind of retracement, we want to really measure that retracement. Does it pull back to an area of support on one of these time frame charts and then starts to move higher? If it does that, then I'd say we're going to get a rally of at least maybe a couple of days, 2 to 4 days, so today being number one. And where the rally ought to take us to on the daily time frame chart for gold is back towards its profile levels. So the first area of resistance is going to be 27.30. If price can get above that, it would be 27.54. So I'd say that more likely than not, we're headed towards the 27.30 level. And then as we get up to that area, we need to monitor those intraday charts as well, see if there's some topping patterns, just the opposite of what we just did. Right. So that's kind of how
you're running into, you want to know if you're running into resistance on the lower time frames to say, okay, well, it looks great on the daily chart. We get up to 27.30. That looks really actually kind of bullish, right? Because it's a piercing candle. It's a key reversal. Got all this bullish things. But in the intraday, you want to see, well, are we experiencing headwinds on on all these other charts to see if it's going to stop them?
And I also wouldn't want anybody listening to us to hear me talking and say, okay, now's the time to jump in.
Sure.
I'm saying you may want to jump in, but why don't you wait for a retracement first? See what happens on that retracement. Now, if price just simply closes above whatever the high of this pattern is at 12 noon, and right now it looks like the high of the pattern is going to be 27.0780. And so if we see price start trade above that and closing above that, boy, that's telling us, Tom, that we're back on our way to at least the 27.30 level. So now all that sounds bullish, but there's a possibility that gold has made a major top. I've been with you before talking about the major bottom that I had seen out there. And now what I'm going to do here is I'm just going to show you 1980. So we're in a condition right now. When gold really moves is when we have Middle East tensions, especially when there are Middle East wars, and even more especially when the U.S. is somehow involved with it. Sure. So that's where we're at. And if we took a look at the rally since was October 7th, 2023.
Of last year, yeah.
Right? You're going to see just a gigantic rally. 67%, 40 to 60%. I can't remember the number off the top of my head. But if we go back and we were to take a look at gold during the time period when the CPI just simply took off from 0.5 to 9 or whatever the final number was out there. So during an inflationary time period out there, all we'd see in gold is a sideways consolidation.
Okay.
And it turns out that on October 7th, gold was at the bottom of that consolidation. And if you go take a look at gold, everybody should on their charts, go take a look at gold from October 7th and see the type of move we had. And then take a look at that time period where the CPI was growing. I think it was June 2020, maybe to 2022, something like that.
Sure.
I don't remember the exact dates, but it's easy to see on the screen. So then what I did was saying, okay, I want to go back to 1980, the last time that we're really in this kind of a situation. That was during the time period where the students, the embassy in Iran was taken over, and we had hostages there during that was during the Carter Reagan situation. And what I know, the reason why this is so close to me is because at that time I was in a college class. My teacher was a big gold bug. He was a central banker in Switzerland. Okay. So this guy was really knowledgeable, and I used to drive him around. I lived in Detroit. He was just maybe about 6 blocks away from me. So he would, he couldn't drive or anything. So I would take him around. He would pay me in gold.
Oh my gosh.
Yeah, not every trip, and I didn't want him to pay me for anything. I used him as a resource. I wanted to learn, and
Right.
so I was buying gold in the 1980s. Okay, and I didn't know anything about trading, technical trading or what have you. I even bought at the high.
Wow.
So I have some
Wow.
coins that I did buy at $800.
January of 1980.
Yeah. But what we can see here, we were talking about those 9-count tops and bottom signals that we were looking at, Rhodes Momentum Indicator patterns. In 1980, the gigantic move, it actually ended with a 9-count on its weekly time frame.
Wow.
So then I said, in it wasn't until 1981, right? It was 1981, whenever Reagan took office. That was the day that the hostages were released. It was not in 1980. It was not,
Sure.
January 18th of 1980 out there. So this weekly chart, so it said, so in other words, the market or gold top before the hostages were released. So then I came back and said, well, what's interesting about this is this week, gold is going to confirm a TD 9-count top for its weekly time frame. And here, and this is the bad news, is right now we've lost momentum. And we haven't broke any support, but it's lost momentum. And tomorrow, a close below 27.1920 will say, be careful, because this could be signaling to us that all we're really getting on the daily time frame for gold is a counter trend move. And counter trend moves will last typically 2 to 4 days max out there. So what I would be, do I know that this is going to be a major top? It's got the potential to absolutely be a major top. It's very, the hostages that we're dealing with now in the Gaza Strip or what have you, they haven't been released yet. But what the 1980 study showed me was that the top can form. Somebody always knows something, but the top can form before the actual event takes place out there.
Got it.
So we're in that same kind of condition right now. Now we know that the election trade here, that at least with Trump winning right now, it appears to be northward with regard to with regard to equities out there. But gold, maybe he is going to be able to resolve some of those things over there. I don't know whether he will or he won't, but the market has acted as if he would.
Well, and Steve, traditionally election years, after November, first week of November, gold does behave differently depending on who is, either keeps office or is elected to office, and it's generally red team flat or lower, and blue team gold is flat or higher.
Yes. So if we take what folks can, another tool that I like to use out here, just simply from a seasonal standpoint, and it's what you're referring to. How does gold trade after an election? Now, this is just generally speaking. So yes. I have to manually go in and put in and select the years for either a Republican or a Democrat or a first term or a second term. So you kind of got to get your things nailed down as to what we might be in here. But just generally speaking, this is gold's pattern during election years. So we were in an election
kind
year.
of flat, right?
Very flat. So the red line is where we're at today. So this shows, like you were saying, we could be, ordinarily we would see just a consolidation.
Yeah.
Now, if I go back and put a Democrat or a Republican years in here, I may find something different. But this is right now, this just simply shows people exactly what you said.
Right.
And it may come to fruition. And if it does come to fruition, which is just a consolidation, then on a weekly basis, we shouldn't see gold fall below 2502.70. And that's the real number out there. If price closes below that, that's where price is broken out from. That's really telling us we have a change in trend.
Okay.
But it's a long distance down. We're 2,700 right now versus $200 move. So if you're long gold, hopefully you're long from much higher, much lower than the 2,500,
right.
Level out there. So just something, and I didn't know this until really I started working out on Sunday and started going back saying, I'm starting to get a twitchy feeling here that maybe we're getting ready for some type of gold top.
Okay.
And then when I went to 1980, and I was like, wait a minute, we got hostages now, they had hostages then. But then when I found out that in 1980, the hostages weren't released until afterwards.
I remember that. It was literally I think it was the day after the election.
Yeah, it was the same day.
Or the inauguration.
It was.
Excuse
It
me,
was
the inauguration.
It was inauguration day. You're right.
And that was really kind of the I don't know, pettiness is the word you would use, but it was certainly directed at the former president that we're not going to negotiate with you, which
Yes.
Is unfortunate. But I do remember that. I was young. I was 11 years old, I think.
Oh, cool.
Yeah.
Cool.
So
Yeah. So, and so you ask, what do? I'm a pattern recognition trader. And I just have this one set of tools that I use. We could go back to, I have data in the Dow goes back to 1896. I believe. And so I've done, and what's interesting, what I found out the most is even during these volatile times, right? Because they still haven't been able to, nobody's developed a software application where I can hover on a day and find out what was going on in the news or what was politically happening or what, So,
Right.
So because I can't do that, I just go back through historical charts and then understand what was going on in World War I, World War II, what patterns were present. Was the market following just emotional things? Well, yes, but those emotional things bear out in the technical tools that we use here to
Right.
give us an edge. Doesn't mean it's right, but it gives us an edge. We have logical reasons why. We use proper position sizing. We use proper stop levels, and then you're good. It doesn't mean the trade's going to win, but you have reasons to take the trade. We have reasons now to be cautious with regard to gold.
awesome, Steve. This time goes way too fast.
Yes.
But it's always great to see you. Where can people find you?
They can go to masteringprobability.com, and what they can do is I've got a newsletter that they can take a look at. Masteringprobability.com is it's called the Trader's Edge Show that I also do from 11 to 12 noon. Those are all archived on YouTube, so people can go take a look at that. They're just great training, and especially it's really important for folks because look, I am a big NinjaTrader fan.
No, we
Not just because
appreciate
you
that.
asked me to be on, but I've been using this application since 2006.
Wow.
So I believe it's the best application out there for trading.
Awesome. We appreciate you coming on, Steve. And
bet.
we'll do this again, hopefully not in the long future, in the near future.
I'll hold you to that.
All right. Okay. Please do. Thanks, Steve. We're going to take a quick break. And after that, Mike and Jim will have the midday wrap up. Stay tuned.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Hey, welcome back, everybody. This is Midday Wrap-Up. I'm your host, Michael Burke, joined by Jim Cagnina today. Jim, things are still going up.
Yeah, I know. They are. The trends in some of these markets are continuing.
So, actually the Dow is down 23 points, but you really can't complain about that when we were up 1,500 points yesterday.
I know. I'm still startled by that, by the way.
It was a little startling. I agree with you. I have a question for you. The dollar is super strong again today. No, wait a minute. Well,
No,
I always get that mixed up. Today, the dollar is giving back almost everything that it gained yesterday.
Yeah, and we're coming into our second major event of the week, right? We had a major event yesterday. We're going to have a major event today, or 2 days ago. We have a major event today. And, I don't think there's any doubt in the world that we're cutting 25 basis points today. And, that's gonna cause some downward pressure on the US dollar.
Yeah, I don't have the dollar index, but let's go to the chart. This is the euro daily chart. You obviously, you can see how strong the dollar was yesterday. Yep. And then today we're giving some of that back. We're back above that 108 level.
Yeah, for sure. Now, whether or not this is temporary or not, who knows? I mean, we're way below the piercing line of that previous candle. We're right up against that double bottom again that we saw previous to this. And I think your level is right on spot here. So this is kind of a critical point right here. I'm not sure I'm not sure the dollar is going to continue to be too much weaker at this point.
I kind of agree with you. The last time they cut rates, it really sent the bond market into a tailspin, right? Yeah. And but maybe that was because of the 50 basis points. So maybe now that we're all kind of used to what's going to happen here, maybe this will settle down a little bit. But yesterday was an incredibly volatile day for the dollar, and just amazing move. I don't think we've seen that big of a move in the euro against the dollar in a long time.
Yeah, it was spectacular for sure. If you pivot over to the British pound, that recovery is going a little bit better. But even through the lens of their 25% rate cut that happened this morning, so that's looking a little stronger versus the U.S. dollar. But we're still below that 50 EMA. The British pound's not out of the woods yet.
No, I agree. I mean, they want the ECB wants us above 130, but they probably want it more than that. But yeah, I think 130 is pretty good price happiness. If you look back in July, that was a key level, and it was another key level in September. So I think that's the price happiness for here. We'll see how this plays out, though. in the next week or so as everybody absorbs this rate cut.
Yeah. Yes. And, I think the devil's going to be in the details, right? What exactly does Powell say regarding potential cut again in December? We have that summary economic projections that come out every other meeting. And then so we'll get a sense of what the FOMC members, how they've adjusted their feeling on GDP, on inflation, and on actually where Fed funds should be. So it should be, that's going to be interesting, that summary economic projections.
Yeah, that makes sense. Was there anything in the news today, the economic reports that jumped out at you? Everything seemed pretty much in line.
Yeah, no, I think so. That cost index, yeah, maybe a little worrisome because it was ticked up a little bit, but it seemed like from an employment point of view, everything's kind of going sideways. It was 220K for insurance claims. And, there's a little bit of negative there where the continuing claims are, ticking up a little bit more than we've seen in the last couple of years.
Yeah, this is the E-mini. I wanted to let me bring that up. This is the E-mini. We're seeing really good follow through today. They were telling us that the market was moving up on, on Tuesday, people were positioning themselves before the election was called. And then yesterday, of course, just amazing benchmark day. And today, just really great follow through. We're only 6 handles away from 6,000. Pretty amazing.
Yeah, I know. Self-fulfilling prophecy, yes or no? Yes or no today? Is it going to be a self-fulfilling prophecy? I say yes.
The thing is, me, I think that there are sellers anticipating it, right? So today is proving that it's not another breakout day. Today is proving we're back in kind of a normal trading routine. And if we're in the normal trading routine, then 6,000 is a key resistance level. There's sellers there, and there's sellers below that who won't let it get there, perhaps. So I think we're stuck under 6,000 today. We may wick through it. We may see that, but I don't think we're going to break out of that, at least not today. Otherwise, we would have seen it already.
Yeah, I hear you. But, there's also that kind of counterbalance that's going on right now with, hey, let's wait for the Fed, folks. Let's not get too far ahead of ourselves, right? And so you get that reversion to the mean sometimes. Obviously not today. We're up 36 handles. So there's a little bit of a counterbalancing effect, I think, with, what the FOMC is going to say. And they might be as rosy as possible. And that I think that would trigger a E-mini S&P above 6,000.
When you say that, do you think that means they're taking off another 25 basis points in December, or they might pause in December?
Well, that's a good question. I mean, the CME Group Fed Funds tool was suggesting a 33% chance that they are going to pause, but that means that it's a 2/3 chance that they are not going to pause.
Yes.
It just seemed, and what Blue told me a long time ago was, historically, once they begin a rate cut cycle, they begin a rate cut cycle. The same with the rate increase cycle, right? It's slowly increased or it's slowly decreased continually. Generally, when you have these higher rates or lower rates, it's once that cycle starts, it kind of has a little bit of momentum and keeps going. So that favors another 25 basis point cut in December if you subscribe to that theory.
I do. So that's what I'm thinking as well. We'll have another 25. Yeah. I wanted to show you the VIX today, because the VIX is telling us that the market makers on the options exchanges aren't really that worried about this rate cut and its effect on the markets. In fact, we saw another tick down. VIX is at 1529, but even more bullish than that is that we have a little red VIX candle, which means that volatility is decreasing as we go through this session. So it'll be interesting to see whether that's a red or green candle at the end of the day today. But the market makers are telling us that it's all full speed ahead here.
Yeah, it's almost like Tuesday's election just popped the balloon. It's like, all right, we're done with this tension, right? This uncertainty. Now it's back to normal. That's what it's telling me.
Yeah, it's funny when, the market has done so well, and whenever it's done this well for this long, you start getting these people who come in, preaching doom and gloom that it's a bubble, we need a 50% retracement or a correction. And then whenever that crescendo gets loud, the market takes up another leg,
Yeah.
and I think that's what we're seeing right now.
Yeah, I'm with you on that.
Let's look at so let's look at the NASDAQ. I don't think we looked at this. Maybe we did.
Let's do it.
So this is the NASDAQ. Nice leg up, break above 21,000. So yesterday was not an all-time high, but it was an all-time high close for NASDAQ.
Okay. Yeah.
And today, we're going to break both of those records again significantly. We're up 275, 1.33%. Where do you see resistance here?
Good question. Even if you go back to a daily chart, it doesn't help unless you're using some kind of extensions or harmonics, which I am, by the way. But right now, I literally see it right here at 21,182. So we're a little bit above it right now. I have an old extension on my daily chart.
Right.
But after that, I mean, the next step up is 391 for me.
Interesting. Yeah, I mean, again, when we get up here, it's really difficult to say where is it going to stop, because the momentum is there. We're seeing super great momentum after yesterday. The only thing I will tell you is that the volume so far today has not been great. If you look at my 5-minute chart on the volume at the bottom, our volume is a little less than what we would normally be, but I think that this is completely skewed, by the way, because of yesterday. So I don't think we're really underperforming on volume today, because yesterday was so big that it skewed my 8-day average out of. So it's going to take a week for this to get back in line once that day drops off. So, I just realized that may be a weakness of this indicator, is that when you have one of those big days, it skews it for a few days after that.
Yeah, and it's not a weighted average, right? It's just a regular average.
Just a regular average, yeah.
Yeah. No, you're right. You're right. So but the other thing to consider too is, after FOMC, we might get a volume spike across the board in a lot of these.
That's a good point. That's a super good point. All right. So crude oil cannot get above 72. We wicked up there today. We were up there a little bit earlier, but this is a market where 72, I think, is a strong resistance level. Right now, we're almost there again. We're just up a quarter of a point at 71.96. So again, this is the intraday chart. This was much weaker. Almost, we were below 71 for a while, and then a nice rally here. What is your thinking? You think 72 is the number here? There's not a lot of news to come out here, so I'm not sure what's driving this higher.
Yeah, no, when I look at my daily chart and I go back, it's been a little volatile, but if I go back almost 2 weeks, 72 spot zero is a wicked area of resistance. And we're bumping up against it right now. Now, the trend ever since the 29th, I don't know, 7-8 day trend has been pretty bullish right now, but I think we're hitting it, man. I think we're hitting the ceiling right now. It's going to be hard to break through that 72 level. I agree with that.
If you look at my chart, there's a really thin Ichimoku cloud right there, which means that really it's not in play. The Ichimoku cloud is not really a really strong resistance level. It is interesting, though, that level is at 72. And then if you look right below that, I've got the 21 SMA and the 50 SMA tracking each other side by side. That usually doesn't happen too much unless the market is consolidating or the market's going to head in the slope of those moving averages. So I'm a little bearish here.
Yeah, no, I think I am too. And Steve Rhodes had some interesting comments about maybe tensions in the Middle East, relaxing a little bit. And, the idea there that, okay, maybe this is going to be a less jittery market. and more, consolidation would be a normal result of that.
Yeah, and based on that, I'm with the current fundamentals of this market, lots of supply, demand is questionable. Watching China, I think again, as we both said, I think we're both bearish here.
Yeah.
Nat gas is an interesting story. The natural gas storage came in right in line. They added 70 billion. Actually, that's a good question, Jim. When I look at this number on the chart,
yeah,
I don't think we can add 70 billion every week. So is that an inventory number instead of an ad?
I
Because
believe
I know with crude oil, it's an add or a draw.
Right.
Right. But if you look at the crude oil, if you look at the nat gas chart,
yeah,
it's always an ad.
Yeah.
I mean, where are they where are they putting that natural gas? I'm this hit me today. I was looking at the chart and I was thinking,
yeah,
we always characterize this as an add or a draw, but
it's a storage report.
Yeah.
It's a weekly natural gas storage report. So I think those headline numbers, I'm double checking right now. I'm looking at the website, is just that.
It's how much is in storage.
Yeah.
Interesting.
Yeah. So this week, yeah. So again, it's it's a backward looking data a little bit, but it was a build of 3.932, and that is going to be, I don't know even know what that's measured in, some crazy billions of cubic feet or something.
Millions and billions, yes.
Yeah, billion cubic feet. So that was an ad.
Got it.
Yeah, natural gas stocks. That's what it is.
Thanks.
You had me second guessing myself. I was like, wait a second.
Yeah, well, me too, because it just didn't make sense there for a second. But when you drill into the report, you get a better feel for it.
Yeah, and if you look at but they do have a longer term chart on their website, folks. So if you go to EIA.gov, you'll be able to find this weekly report, and they have a really nice chart with the standard deviation around it. And we're starting actually to turn down a little bit. So we're not at a peak anymore, at least.
And they also have, where you can go for crude oil too.
Yes. Now, wait a second, though. This just in. Oh, this is a 5-year maximum and minimum. Never mind. I'm looking at a 5-year maximum. But yeah, these charts are awesome.
So here's nat gas.
And so Mike, hang on a sec. To your point, I'm sorry, we're going to beat this to death.
Okay.
This might be just the net number. So if the net number was less than last time, then gas is coming out.
Correct. That's what I'm thinking.
Yeah, you're right.
That's what I'm thinking.
Yeah.
So
anyway.
nat gas is consolidating. I'm looking at the chart now. We had that gap up. Remember, you and I were talking about, will it fill the gap?
Yeah.
And it did. It did fill the gap.
7 days later.
It had a long way to go, but it did it like in less than 2 weeks.
Yeah.
And then but it filled the gap, and buyers came right in. It wicked down to the 50-day moving average exactly on that day. And buyers came in and took it back. And 2.8 seems to be the resistance level here. The Ichimoku cloud is also in play. That's going to be support at about 2.7. So we're kind of trapped here, 2.7, 2.8.
Yeah. And so the cloud's going to keep it up, maybe, right? Is that how that works?
Yes, the cloud's going to keep it up there. So it's a green bullish cloud. It's good support. And the deeper you get into it, the stronger the support until you break out. So it would take a pretty significant move here. Yeah. And the fact that we filled that gap so quickly in one day, we recovered a lot of what we filled there in one day. That's, I think there's upward pressure here. We talked about this. There's the seasonality here is bullish between now and the end of the year. So they anticipate colder weather. They, whoever uses nat gas for manufacturing or electricity generation, they buy it now. And that's why we're seeing they're locking in those prices now at 2.7 because they think it's going to be higher later. If we go back here to last year, we spiked here in right around the 1st of November, right? Where we are now. Now, again, normally I would think that we were already pretty high here. So it doesn't look like the seasonality really worked out last year. And then there was another rally toward the end of the year there. So maybe this was some other factor coming in here. But generally we see nat gas rise through the end of the year, and then we see it fall off after that for the first couple of months. So we'll see if that plays out this time.
But if you look at the cloud last year in November, and it was a rocky ride, but then we eventually just cut through that cloud and went and started trading underneath it.
Correct. And again, I think that was against the normal seasonality.
Yeah.
The normal seasonality would have been higher, but I think we were already so overbought here that the market really couldn't go any higher at that point. So sometimes that the seasonality works, and sometimes it doesn't work.
Yeah.
Gold got back to 2,700 today.
Yeah.
And again, look, we've got the Ichimoku cloud there at around 2650, a little bit higher than that. And we're right in between that 50. We wicked down and through that 50 yesterday, and same thing today. And now we're bouncing off of that. That looks pretty good.
Yeah, so I use a 50 exponential moving average, and we just wicked through it temporarily this morning, and we just bounced right off of it as we're driving back up to, I guess, what my new area of resistance is going to be is approximately 27.25.
That makes sense. That's where my 20 is as well. 2750 was price happiness until yesterday.
Yeah.
So I think we could get back up there. And one other positive factor here is that this is a really good key reversal. We're at the bottom of a pullback, lowest low of the last 20 or so sessions, and a good solid close in the middle of the previous candle. Definitely looking for follow through tomorrow.
Yeah. So, and we're pretty close to the piercing line of that of yesterday's red candle.
Pretty close,
not quite there, but pretty close. Yeah.
Yeah. And again, it's funny how these things all work together, right? Weak dollar, strong gold and crude, right?
Yeah.
So, everything's kind of related here. So Jim, go ahead.
Yeah. We put what? I'm sorry. Oh yeah, Bitcoin. Let's talk about it.
So Tuesday in Trading Club, we put on a swing trade. Are you still in that trade?
Oh yeah, no, I have it on, and I meant to ask you. I'm going to shift over to my other account so I could actually see the numbers. But since we're in like sim mode, you got to replace the stops and everything. Right now, so we were long at 69,860, one contract.
Right.
And we had a target, I think it's 78,000. Is that correct?
Yeah, 78 or 79. I think 78 would probably be a fair target here.
Okay. So we're close. And then we moved our stop from 68,000 to 72,000.
Correct. So we're not going to give everything back.
Correct. So anyway, it's looking good here. We just need a little follow through. We're just kind of stuck at the top here with a weird looking doji. I don't know even what kind of doji this is. A hammer, a dragonfly.
I'd call that a dragonfly. It's anytime you see that kind of a doji, it's a indecision bar. It could be a reversal, but we're not making a higher high today yet. So yeah, I mean, again, when the market runs up like that, it's got to pause and take a breath. And yesterday was one of the biggest days in Bitcoin as far as range goes that we've seen in a while. And of course, that's an all-time high and an all-time high close. So not picking a top here at all. Yeah.
And the fact that we haven't had any retracement so far, I think that's bullish also.
Agree. I agree with you. I don't think that, I don't think that anyone is looking to go short here. I think everyone thinks that this momentum is going to continue.
Yeah.
Pretty amazing. If you look at it from this perspective, we really didn't go anywhere from February until, till now. Right? We've got it's been a volatile market. It's fun to trade. It's been as low as 50. It's been as high as 73 or 74. Pretty amazing. But when you look at it like this, it doesn't look like it went anywhere. But if you actually live that, it was pretty incredible.
Well, yeah, and when you say out loud all-time highs, then people, then they listen.
Yeah, exactly. That I totally agree.
Yeah.
Jim, we're just about out of time. This has been fun. Who has bars closing today?
I think Mr. Schneider.
Perfect. So Tom will be back at 3:15 for bars closing, but we have a very special event for all of you. We are going to host the FOMC event starting at 1:45. We'll look at the markets heading into it. We'll look at the markets heading out of it. And then we'll bring in a very special guest, Dan Gramza, to kind of tell us what's happening and what to expect between now and the end of the year based on this cut and potentially December cut.
Awesome. Can't wait.
All right, everybody. We'll see you at 1:45 right back here. Thanks so much for being with us. We'll see you then.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by Ninjatrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.